stop field.
Good morning, everyone.
Oh, welcome everybody. I guess I was on mute. I should know when I'm on mute. I should check the audio. So welcome everybody. Sorry, I was on mute. That sucks. So yeah, I should remember to unmute myself. So what were we at? We're long on the NQ. That was from before the open. If you were in Discord, then you saw that. So that I said probably long looks like on the open. I did call the actual CL short. I don't know how much that's going to go, how much legs that has. Did just share in the room. If you're not in Discord, you want to go to Discord and actually join our Discord. That's where I shared the key levels for gold here. We're right around 1940 and 1952 are our key levels, or at least our immediate key strong levels on gold on GC there. I don't have a trade yet on anything else. Bitcoin is deciding here today, I think, if it's going to hold this level and go test up. Look at the higher time frame, the 4 days, trying to create a structure there. It's still not in a great space as far as a long perspective. Let's see if we get knocked out of this trade here on this pullback. If we do, we'll probably re-enter. Maybe down to 314 on the NQ. Welcome all. Hope everybody's doing a good or having a great trading day so far.
Yeah, that was a really good entry here. I was just looking at that, but stayed away from the open because sometimes it just whipsaws. But the RDA on feature was perfect right
Yep.
before the market opened. And
Yeah,
right
that's
past that,
where I entered basically.
and there were a few more opportunities to get in. It does look like a bit of a fade now, though, because we hit the RDA on C3. Seems like it is
Order
reacting
filled.
here. We also hit the strong level
Yep.
C3.
I just reversed. I'm short now.
Let's see.
I'll see if that short pulls off. I mean, at least to 328. Maybe down to 305, maybe.
The overnight session was just a healthy pullback. Completing a stair step on C4.
Yeah, it really wasn't that volatile, actually. I mean, there was no news to set up for the next day. There's no news today, so. And then the news on yesterday was obviously already priced in or already reacted to.
Yeah. Got some FOMC speaker, but seems like insignificant. But yeah, very healthy pullback without breaching the prior
Order
lows
filled.
on C4.
Yep.
So this could now turn back down. Like I wouldn't be surprised to see another healthy pullback here. But so far,
Order
day
filled.
trades are hard to.
Well, the next level really is up at that 395 level on the NQ. So
Yeah, it's way higher. And it looks like it's gunning for it. I suppose that way.
Order filled. Order filled.
I thought I turned this sound down. I did. Okay.
Got a bit of an overshoot here.
Yeah, I'm short.
So
I should change my.
that's funny because I'm actually long. But
There we go.
I just kind of break even here. Okay.
Yep. No, I'm actually long now, or I'm in profit now. I wonder if I can reset that. I don't remember what the range was originally at. Oh well. Yeah, so there we go. Good. I mean, next impulse down. Only in 4 lots there, but up about $3,300. Not bad.
Yeah, that overshoot is not confirmed yet. Still
Yeah.
flirting with the resistance.
Yeah.
Order filled.
All right.
There we go. Got some movement. Gonna have to take some profit quick here, though, I think.
Yeah. At least scale out a little bit.
Yeah. I'm starting at 236 or 337, 336. If it gets there, it's got to break that level at 340. Quick scalp here for this fade.
Yeah. No fade cards for me.
Yeah, but you did call the zone, so that's good.
Yeah. I think before you can feel comfortable, you got to see that you can call it and actually work.
Yeah. Well, that's really the path. The path to fading is doing really good momentums, because then you start realizing when momentum starts failing or starts to stall.
Yeah. In hindsight, it's obvious, right?
Yeah. Everything's obvious in hindsight with the chart, I guess.
Order filled. Order filled.
Yeah, see, that's where you have to be careful. Like, the buy side there just ripped up, picked me up on a couple new positions, and then sold off right away. So that might be the. There we go. Taking profit.
Order filled.
Yeah. See, now I'm tempted to go long.
Order filled.
Yeah. Well, it is a
Right.
good zone to go long, but it could.
It looks like momentum is forming to the downside, right?
Yeah, but that move there where you see a big spike up like that, if you're watching chart 2, that big spike up and then an immediate answer usually means that there's going to be follow through in that immediate answer, usually. Now, it is at the RDA on chart 2, so you do have that aspect, but typically that means that there's going to be an immediate answer. But that's also why it's important when you're fading that you have a good, my basis isn't that great, but at least I'm in profit. Now, if I do get taken out, all of my stops are in profit. So if I
When
do
you
get,
say immediate answer, where do you mean?
well, that spike up to about 360 on the NQ
Stop filled.
was immediately answered right away.
Oh, you mean it? I thought you meant after the spike.
Oh, no.
Stop filled.
Okay, you mean that was the answer? That was answered.
Yeah. Usually there's more of a follow through than this, but now there's immediate answer to that spike.
Stop filled.
So,
Order filled.
but you can
RDA, almost.
Order filled.
you can almost get good at basically doing what I'm doing, which is just capture every spike and just profit off every spike. You're not really trading with momentum, so that can get addicting. Eventually, one of the positions is going to hurt you, but that's the fade way to do it, which is what I'm doing, mainly because I still see. I mean, the closer we get to 396, the more likely that that's the target. So I'll want to stop, but which right where you said going long was the perfect area to go long, which is right at the RDA on chart 2.
I didn't though because this big
Order
spike
filled.
to the upside
Order filled.
scared me that it would be answered by a big spike now. Like
Yeah.
I'm saying, like the big momentum move up.
Order filled.
But now I'm going
Order
long,
filled.
so I am going long,
Mm.
and then I'm looking at scale in below that RDA. Because it does look like it's going. I mean, at least on the short term, it wants to go up to at least the 400 level. Ideally, where it wants to get to. I mean, it wants to recapture the daily open. That's the first thing it wants to do. But
It's interesting how you could make a case for long and short, and both could be executed well. So I think part of probably what we need to delve in more here would be nice to hear more about in general trade management, because I do see you oftentimes switch side, and that's something that most people probably psychologically are having a hard time. Like you've been waiting for this long to go long for such a long time that then it's hard for you to mentally just flip and say, okay, it's not working out. Let's switch to the short side, vice versa.
Yeah, I think that it is hard mentally. It's like anything else. You have to train yourself to do it or really be, you have to not care whether or not you're right or wrong, and also not get stuck on, I was just wrong 4 times in a row. As long as they're little small cuts that you're wrong instead of big, gashes, you're good. But it is all about, it's really about predictive. I would say more of it is more people need to predict where they think price is going based on what the system's telling them instead of reaction. Most, I think one of the biggest challenges is most traders are reactionary. They're not predictive, where you get the best entries and you get the best, and you have the best opportunity for trade management. Trade management is a direct result of your entry. If you have a terrible entry, then trade management's going to be, do I scale in or do I get out, or how do I lose less? If you have a great,
No, but
go ahead.
I mean more along the lines of, like, for example, here, okay, this is a good place to do a fade. You have your levels, you have your theory behind it, you have your probability, and you're saying, okay, this is a good place to go short. And then based on what you're seeing, you're saying, okay, well, that's it. I'm done with the fade. I'm going to go long again.
Stop filled.
And I think that decision was based on the fact that it went down and then went up right. So basically, the RDA was answered as well. So to you, that was a signal that, you know, fade is over, right?
Yeah, I mean, because that first pop up was answered right away with a sell off. Typically, that continues, but then that was answered right away with buyers at the RDA. So that's why I'm not fading anymore, and I'm just looking. Okay, because it's first starts from not even that. It first starts from defining at a higher level on chart 4, chart 3, or the daily or the 4-day. What is your guiding higher levels that define your trade? So we already defined that right around the 400 level as far as where it wants to go. And it's so obvious that it wants to go to the weekly open. That's also why understanding whether or not the weekly open's in play, it's so obvious that
Is
that's
there a good indicator for the weekly open on the trader rate?
no, I mean that's where I'm using TradingView. So I'm sure there is a weekly open, but I don't think what I want Trade08 to have
Order
is,
filled.
can you put the NDX weekly open and the NQ weekly open? That's so that's why you often see me see these two charts, because look, I'm looking at the NQ and NDX right now. It probably is a good fade zone anyways, because we do have 1, 2, 3, 4. We have about, but the fade zone doesn't really start until like 383 up on the NDX. But the other thing, we just filled the gap. So that's the other thing to kind of consider.
Filled.
We just filled the gap that was from yesterday, right?
Yeah,
So
that's right. That's right.
so I reversed. So now I'm short.
I was testing yesterday something. In TradingView, you can do formulas, right? Like in where the ticker symbol is, you could actually do formulas. Like you can, let's say, do Apple plus
Oh
2
yeah, yeah.
times Tesla, yeah, etc.
Well, I
And
do that
yesterday,
for
what I
my
was
big tech.
right.
Yeah.
So what I was doing yesterday was I made a formula which is super simple to show the NDX price in terms of the current futures contract, meaning it would plot the NDX, but it would subtract or add the difference based on how far it is off of the futures. So when I do projections on the daily or whatever, I can see the price in relation to the current futures price as
Yeah.
opposed to the actual NDX, instead of doing this in my head.
That'd be interesting to see.
Yeah, you just do 2 times NDX minus NQ, 1 exclamation point, and there you have it. It shows.
So I did fade that move. So I did reverse. I went from long to short because what I saw is if you look at this chart, we have 1 impulse move, 2, 3, 4. We had 4 successive green candles. And then we had our first signal there that it was running out of momentum. And then there might be a momentum check. So that's why I'm only in 2 lots, but that's why I went from thinking long to shorting. I'm still of the opinion that the weekly opens the target, but this is also, look at the NDX, that was a full gap fill. So you would expect maybe some, I don't know, profit taking. I don't know what to phrase it. Now it's just a matter, is it going to hold the fast momentum, or is it going to go all the way down to the slow momentum to find support? Which is aligning with, if you look at chart 3, I mean, it's now below the RDA in chart 3. So I think the level is probably more around 300. Yeah.
Quite the overshoot.
I think it's right around 321, right around the 50% OR, the developing OR.
It's almost there. It's at the M9C1.
Yeah. But, you know, you've got another 5 or 6, 7 minutes before you expect a pivot for the first half hour of the market.
Mm-hmm.
That pivot then would be to the upside based on this current action. So, and we would expect just as fierce of a pivot that we saw on the downside here.
I'm going to try find a position here.
Yeah, so if you're watching on YouTube or you're watching on TradingView, you want to click the down below, you'll see a link that says join us on Discord. Join my Discord. So you want to definitely join, both in the description or down below on TradingView. That's the best place. I share charts. We have conversations, ask questions, share a lot more. That's really the hub of everything I do there. So you'll definitely want to join Discord. You are interested in trading the RexDog trade system. One of the things you want to do is check out rexdogtrading.com. You can also DM me if you're ready to get started. We are working on, or not working, we're working on an update, some new training, and I think our price increase, is it going to hit today? I don't know if it's going to hit today or tomorrow or this weekend, but we'll be up. We priced at $9.97 for, I don't know, 4 years, 5 years. We're increasing the price now, just because we're on the next stage of my mission with what I do here. Really about creating elite traders, really focusing on doing great trading, and focusing on teaching you to fish. Actually, there is a difference here. One of the things we do is, it's not just fish, it's actually giving you fish, feeding you, and then teaching you to fish. That's one of the things I realized we actually do around here. But I'll be speaking about more on that as time goes on here. All right. The question is, do you re-short up here? Is he going to tag the daily open again, or is he going to fall short? I'm trading relatively light yet, just because I'm still recovering from yesterday, my treatment.
Stop filled.
So my head's a little waterlogged, but other than that, I feel okay.
You sound great, by the way.
Yeah, I got juice and ate well yesterday, so, and got plenty of sleep. I think it's part of it. I didn't push myself yesterday. Usually I would have probably pushed myself.
That's good. If you hadn't mentioned it, I would have never guessed that you had treatment yesterday. That's crazy.
Yeah, my mind is, but my mind is, I feel it in my mind. That's the thing. It's
Order filled. Order filled.
it's hard to describe, I guess. Jesus. A lot more. Oh man, I think I'm off on this trade. I don't know if I should be fading this. Yeah, I think we'll keep there, and then I see one more impulse down, then a reversal. That's what I'm trading on.
Stop filled.
But that might be, it might just hit the actual fast momentum, hold the fast momentum. So that's something I have to be mindful of.
Order filled.
Should sell off here. I'm not saying it should, meaning that I'm looking for it to sell off here, I should say.
But what I'm looking at is it bounced off of the 50% of the opening range. We're building a stair step going up, so I'm actually considering going long here. I did.
Yep. I think that's probably a good trade. I'm not there yet, though.
Yeah, I'm out already because I just kind of playing that channel going up, down.
But the more that it holds that, the more likelihood that it will just hold that low, and it was just an overshoot. It did tag the 50%, or then at least the developing 50% OR there.
Right. But now it's at the 50% of the pay attention candle, sort
Yeah.
of on the move down. Yeah.
Order filled.
I got to reverse. I reversed. I'm on the wrong side of that trade. Got knocked out of my CL trade too.
Order filled.
I'll look at going long there.
That RDA on C3
Order
is going
filled.
to change over. Like,
I think the pull for the monthly or the weekly open is just way too strong. Gold might be hitting an area. Yeah. Gold's hitting an area to sell.
Order filled.
you mean this week's open or last week's open?
No, this week it's still below this week's open. The NQ.
Right, but like, I'm not sure. You're talking about going up to
Yep.
550 or down to
No, up.
15,000?
Oh, up to all the way up to 520. It might stop there a little bit because the NDX is below that, but really up to 520.
I think the big battle here would be, is it going to try to break that all-time high? Not all-time high, but the recent, in like July. Yeah. Well,
That's not in play today, though.
All-time high too.
Yeah, no, I think the all-time, yeah. Since really the general rule of thumb on all-time highs, at least that I've developed in the trade system, is that when you take this and you take the recent pullback, whenever it gets above 75%, it's really above, it's just above 50%. It's like 62%, not a fib level, just 62%. Then it's almost guaranteed that the all-time high is going to be breached. But there is a zone in here, like right where it's at, where it rolls over. So the only caveat to that is that this zone here, when you're looking at the daily, is the perfect rollover zone where it fails to exceed the all-time high, which it had a reaction there. So, but that's my general rule of thumb, 62%. It's guaranteed. I've done that, or I've traded that for years, where when things hit at least 62%, it's almost guaranteed that they're going to take out that recent high, especially all-time highs.
A lot of hip traders who try to short there. 62 to 78%.
Yep.
Not to oversimplify things, but it's just like sort of an epiphany moment listening to you and trading together here. I'm seeing how actually vital and important it is to recognize when a level's reacting and go with it, because that's when you get these big momentum moves. Like right now, we just bounced off of the 50%. But recognizing that, and that gives you a big edge, right? Because okay, it cut that level and it didn't work, so now we're in a strong momentum up.
Yep. No, I think or simplifying things is good. I don't think that's bad. So, no, that's exactly
Well,
though.
there's a lot of nuances, but it just like if I have to simplify in terms of, even for myself, to try to find like the high probability trades, I think if even just sticking with this, watching for levels where you get a reaction and then go to C2 to try and pinpoint an entry once you have it all lined up. Like in this case, we did a changeover, looked a little bit messy, but that's normal when it's changing over. Did that stair step, perfect entry around where it's 334s. And now look at this huge momentum up. That's beautiful.
Yeah.
And C2 then allows it to just stay in, which normally, okay, you get in, but then what do you do? Like, I think that's the beauty of this system is, okay,
Stop filled.
it's actually really, in a way, simple, right? You have your levels, and then you have your confirmation biases and momentum indicators to give you more confidence. Beautiful.
Stop filled.
Well, that's what I try to say. I try to say it is relative. I mean, don't overcomplicate it. It's the market moves levels from levels, and then it's just about
Stop filled.
predicting reaction zones and then trading on predictive reaction zones.
Stop filled.
I mean, this, you could say this was,
Stop filled.
I still see the long side here.
Order filled. Order filled.
This is now back to the RDA on chart 2. So see how much of an overshoot it'll do here.
Stop filled. Order filled. Order filled. Order filled.
It's a pretty decent, though, pullback answer, though.
Order filled.
I am going long, but I'm not looking to enter the position here yet. Problem is that the next zone is down. It's down here. What's P48? All right, gold started to move into favor. We are short there on gold. What's up, buddy? All right. Well, that's minorly holding there. I don't know if I don't necessarily want to put a stop in yet. I guess I should. 2 and 5. Why lose money when I got the entries down below? Well, it might hold. Okay, well, surprisingly, that held. We'll see if it's not going to pull back deeper, though.
Stop filled.
So what do we do here is the question. Long on GC or short on GC, long on the NQ. That seems to be working out in the direction. Probably should have been heavier. Relatively light day up, only up to about 10K so far. There we go. Recaptured the high. Guess I should have added to more on that position. Not been as skittish. So we're looking for the actual weekly open tag. So we're targeting on the NQ. Guess I should be considering adding to that position there. Let's see what happens here at this VWAP reaction zone. Did a video on consolidations today. Hey, how you doing? Avoid vanity. What one I just released? You just released on the Q&A, or was it something else? That question or that video? Oh yeah, yep. I figured quite a few people might have missed that. I'll share this on Discord as well. So if you're not on Discord, you want to join Discord, but let's go to the channel. Turned off everything. Whoa. Do we short that? It didn't quite hit the level of right around 398, so I think we'll wait for that 398 test. And for some reason, my levels are not drawing on chart 2. Some odd reason. What's up, buddy? Doing good?
Hey guys, sorry, I got a phone call. Seems like there were some good entries here.
Yeah. You know, I wonder why that sound's not coming over here.
And I'll see how important it is to really set aside the time for trading, because you sit and wait for the setups. You get a phone call for 2 minutes and you turn around and you miss the entry.
Yeah. And then there is the other aspect of it, though, which is you could watch the chart too much and then just overtrade. So there's a really that happy medium that you need to kind of, that balance you need to find.
So it seems like it reached that level we were talking about earlier.
Yeah. Well, it's not quite. I prefer to see it actually tag at least the strong level in chart 4, and it didn't. So that's just one thing I like to see. I mean, really, the strong level is technically right at, it's right at 400 spot 75.
400, yep.
So I like to see it tag it.
I think we need to be that precise. I mean, I think 400 being a round number, especially, it's. But yeah. But sometimes it gets really close to it and it still reacts, right?
Oh, yeah. Yeah. Sometimes it, like anything, it's not exact. It's a zone. It's really, between, $5 below, $5 above is what I would say.
I don't know if that's the correct way to do it, but you're looking at that strong level at the high, but this whole thing was like a retracement going up, right? From this big move down, and we look at C4. And what I do is I look at this entire retracement going up as a zone where it may potentially react. You're looking at the extreme, like in this case at the top of it, right?
Mm-hmm.
You're saying some people are looking at the bottom of it. I usually look at the middle, to be honest. If you look, it actually reacted perfectly in the middle as well. Like you said, it's a zone. It's one thing to. It's kind of hard to think about because we want to be precise. We're like, okay, I should get better with time, right? Have more precise entries. No.
Well, that's why I think you really have to look at it as a zone, not only a zone, but really always expect an overshoot and look at it as a zone, and then it's just trade management. But really, we don't have any. If you look at chart 2, there's no real distinct answer. I mean, it hasn't broke. It's just now maybe switching over momentum, and it's testing the RDA. But there hasn't been any fierce move in one way or the other. There does look like there's a rollover there, but it could just as easily find support at the RDA on chart 2 and just continue, plopping up. Plus, it's at the fast momentum on chart 4. I mean, everything's stacked pretty much. Momentum or biased long now.
Yeah, 400 level is a good one. Oh, there's so much stuff going on now. It's also the session closed from a few days ago.
We do have the opening range closed now officially, so that's done. So opening range has been developed and closed. I'll be back. I gotta make some coffee. What's up, Rex? Look at that. Well, should have took some profit there, probably. We'll put some trailing stops on our gold trade. Hopefully it'll move to the next impulse down. Not much to say other than just see if it's going to hit the RDA on chart 1 and Q, that is. Or is it going to hold the slow momentum? No news on deck, so really it's just trading the market as it sits with no upcoming huge volatility events. Yeah. It is trying to hold that, but an overshoot would be a good VWAP test slash RDA is aligning perfectly together. So I'd look at that as well. I'm waiting for gold to do something more than just what it's doing, but let's see. There we go. Next impulse down looks like it. Now it's just a matter of, is it going to stop at the RDA and the VWAP, or is it going to go down to the daily open? That's the question you need to be asking yourself. Does it have enough energy to go down there? We do have a level right here that's playing around with in chart 4, 325. That's a major level. So if it breaks that, then it could be an overshoot on that major level down to the extreme band of right around 307, which aligns pretty closely with what we're seeing on chart 1. So I was using chart 4 for that analysis.
What's giving you the 325 level on chart 4? I'm just trying to make sure I can come up with that myself.
The line of Coke I just did. No.
Perfect.
No, the 325 level is if you go to chart 4, and then
Yeah.
it's a weak level on the
Okay.
last on the NQ. So the MNQ might be a little bit different, but on the NQ, the last fast momentum check, there's a level right there.
Gotcha.
And so far it held up. So far that reaction we're seeing right now is, I would say, that level holding up, plus an RDA check on chart 4. So, but that's where it's, you kind of look at, I'll share this in the main group in general, but if you look at now chart 1, is chart 1 just going to stop there and not actually want to tag the, or overshoot and tag the RDA or the VWAP? It could just stop here, but it seems more likely that it's going to continue down. Yeah, and Avoid Vanity said, yeah, the NQ and the MNQ levels are different, which they are. So you don't get anything by trading the NQ above the. I mean, you don't have to look at the NQ to trade the MNQ, is what I'm saying.
Yeah.
It does look like it wants to continue down, break that level though. Which once again, if you look at chart 3, it's still overshoots the RDA, which is pretty amazing. If it does, if you, let's say it sells off the rest of the day, it will look like, wow, the RDA really held. But in real time, it would have been a lot harder to trade just because obviously the overshoot of the RDA on chart 3 is pretty, it's a 343 all the way up to like 380. That's a pretty big overshoot.
Yeah, I did it twice. It's really hard to trust.
Yeah. But that's where
The second time, like what I would be thinking is, oh, okay, it didn't really overshoot, so now it's probably changing over, it's so long, and then boom, you're wrong.
But that's where the concept of intention comes into play. Where is this happening? It's happening right at the RDA. So I put more precedence in the fact that it's actually pointing up as opposed to pointing down. Because it's happening where it's happening in the chart, that's where I call intention. This just happening anywhere in the chart doesn't mean anything, but the fact that it's happening while momentum on chart 3 is trying to shift, as well as it's happening right at the RDA, meaning that the overshoots, then I look at this actual pattern as an intention that price wants to go higher, especially when we have the magnet of the weekly open. That's within striking distance of today's range. And I did reverse long. So I don't know how long that's going to last, but I'm also planning to scale in below the RDA on chart 4 if it doesn't work out. And I'm not that large. I don't have that large of a position. Oh, that's good. GC is starting to move. I might take some off at the RDA check on GC. Or at least tighten one of my stops. I'll probably just tighten one of my stops. That way I max or take some off, take some profit along the way, keep 2/3 of the position in. That's the key. Like I've said many times, trading in thirds is really the key to staying in positions long term. So if I get out here on roughly I'll make about $1,100 here if I get out on the GC, and then I'll still have 2,200 in the trade with both trailing stops in profit. So obviously it's a lot easier to manage a trade when you're in profit, but religiously taking profits along the way and trading in thirds so that you're staying for maybe this is a larger impulse move to the downside on GC down to 1943 or 1940. Well, I'm giving it the most opportunity to stick with it. I should have reversed the NQ earlier, but I think it's going to go back down. Yeah. So I reversed. I should have probably took profit or put my stops tight on that.
Yeah, see, now we're just about at that, what you call the 325 level in the NQ. I put about 317 on the MNQ, and we're blowing through it right now.
And now it's just a question is it going to stop here at the VWAP and the RDA, or is the next level the daily open? So, so far it looks like the next level is the daily open based on, but that could turn around real quick if it rips back up here, which my entry is terrible.
It's also on the 5-minute cap in that, I think that's my 500 that I mention every once in a while. I can't seem to take off my charts.
Oh, the 500 moving average?
It's
Or
right on the it bounced on the 500 RDA and VWAP all together. That's a gang of three there.
yeah.
There's a lot of truth to that when you talk about not caring whether or not it's up or down and being willing to be wrong.
Yeah, it really is letting the chart guide you instead of you trying to guide the chart. But you still have to be predictive. I mean, it's kind of like a happy medium. You have to trust the chart, but also be predictive, right? So it's kind of a dual sword in a way.
Yeah. You might.
Why it was a combination of number one, chart 3 was my control, so it was at a level there on chart 3, and then also chart 4, it's an overshoot of the RDA. So it was at an extreme band of the RDA, and I was like, well, what's more probable here? It's really just that asking that question: is it gonna continue up and go to the next level in chart 3, which is a ways away, or is because it hasn't hit this level yet, or is this the first reaction? And I say the first reaction is always the best. So that's really all. It's that simple. It's just taking the trade, and then just giving it enough room to work out. With gold or CL, you don't have as fast movements as you do like on NQ. So you really have to give it an opportunity for the trade to develop, so to say. So that's all it was. I mean, it was just really just one signal backed up by confirmation and then backed up by just giving it enough room. And then once C2 changed over momentum, I was like, okay, well now it's just let it impulse down to wherever it's going to go.
Yeah. So a lot of times, and maybe this is going to sound perhaps like a very simple question, but a lot of your best trades start out as a fade and then become a momentum trade because of the nature of the chart and how momentum forms.
Yeah, I would say not the best trades. I'd say the way to look at it is that, look, you could have trade. I should have been trading up to that level because it was momentum. Well, on some charts. So
Yeah.
the way to look at it is that whenever you have a level test, or maybe when you have a reaction zone above or below price, the only way for it to get there is sometimes for when you enter that trade, for the best entry is for it to be a fade when you enter that trade.
Yeah.
Because two of the four charts, or three of the four charts, are in a opposite momentum and bias direction for it to get to that
Sure.
level. But then but when it reacts to that level, then you're in that changeover pattern. And then that's where I like to trade predictive, which is like, okay, I've developed the system. It's just like you're looking to adopt the system. So for you, you'll come to rely upon, yeah, I see this happen day in, day out. I'd be stupid not to trade this level, right? At least get into a little position. I don't want to, I'm stupid is a little strong, but I see this play out time and time again. Why wouldn't I just enter a little bit and then maybe add on a confirmation? See, I could have traded this the other way and then also got in on the confirmation. But it's when you see a level test play out time and time again, and it also comes down to trade management too. The other aspect is that I'm pretty big on this trade here, about 16 grand. When you go into the trade expecting for it to overshoot, and then realizing that you're going to have to manage that trade so you're not concerned if you get an overshoot, is another aspect that played into me holding that trade, if that makes sense.
Yeah. By manage, you mean scaling in to try to have an exit?
Yeah, on that position, or when I was entering that position, I had at least one more position above where I was at of
Yeah.
3 lots.
Yeah.
And I was planning to scale in at least 6 to 9 more. So
Yeah.
that was my plan. That's the trade management. Now, it just so happened that the trade worked out right at the level, and my protective stops didn't get hit, and I didn't get picked up on those other positions. So I've heard this said before. I don't know how much I believe this, which is when you scale into trades, or your system should make it so that you're 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 not you're missing a lot of trades, is what I've heard said before. Or basically meaning that if you're not missing enough trades, you're probably trading too aggressively. I would say that there is truth in the aspect, if you're scaling into a trade, a portion of that trade should not get picked up. Because if every time you scale into a trade, the max that you're willing to scale in gets totally picked up, you're probably aggressively trading too much, because there's going to be a couple times where that's just going to go against you. Now,
Gotcha.
with our scale in ratio, with what we use, that's hard to make that argument because it's pretty reliable. So it can kind of gotcha thinking that way, but at the same time, I think it's a good gut check on your trading to say, look, if
Yeah.
if I'm always maxing, it comes down to this. If you're always maximizing the size that you want to go on a scale in trade, and then you have to sit through a loss for amount of time, then you're too aggressive. So if you have to sit through a loss repeatedly on you scaling into trades, then you're too aggressive. That's just, it's going to bite you. It's going to bite you more than it's going to help. That makes sense.
Mhm.
Which sometimes it does bite me. Go ahead.
Yeah, I think it was yesterday in the room, and feel free to correct me if somebody else knows, remembers it differently. But I think it was Skywalker that was he went short at the bottom of that initial range, and just basically scaled in after it came back up at the top, and managed a significant loser into what appeared to be a winning trade on what he posted at the end of the day, which was well, it was both genius and a lot of cojones.
Yeah, and but sometimes what that looks like though is that just comes from experience and then doing it, managing your trades, and then it looks like you're have steel balls, but really what you're just doing is that you're I mean, it's going to hurt you. I mean, I had 2 days in the last year that I lost 50 grand, over 50 grand. And both of those were fade trades where I was just arguing with the chart. I had multiple times to get out at a limited loss and I just scaled in too much and eventually just got to a point where I said, look, I'm arguing with the chart and my mind's wrong. So, that can hurt you. But at the same time, I would say it's 80. I believe the system we trade is pretty reliable 70% of the time on what it's supposed to do. And the nuance is that 30% is your mental and your psychological issues and everything else. But the market moves reliably. Oh, someone said I was there, it was painful to watch. Oh, on my losses or on Jedi's losses? Yeah, it was painful. Well, it's probably painful on both, but he didn't lose though. He actually moved it into where.
I think he ended up turning it into a win.
Yeah.
It's what it looked like.
And sometimes, my losses were painful to watch, and because I even in real time during one of them said I knew what I was doing, and I just couldn't stop myself. So that was I knew it was gonna come to a head sometime. I don't fully trade my capital level, meaning that I don't fully utilize my capital level like I could. Oh yeah. Yeah. So he said I shorted when Nvidia skyrocketed. Yeah. So, I guess that's my excuse, or that's my cushion. That's my mental cushion.
Yeah.
And I'm in a,
You can afford.
yeah. And I'm in a mentorship group that, they half the group, they're all traders that are well above me, with years of experience and everything. Years. I've only been trading since 2017 or 2016, really. Well, 2015, but I consider my real trading debut is 2017, but so not that long, compared to someone that's been in for 15, 30 years, right? They're the things they've seen in the market and how they understand the market is vastly different, right? But
Sure.
that group I'm in, half of them think that I'm doing it right. The other half think that I'm doing it wrong. So, there's one group that consistently tells me, look, you have, let's say I have $750,000 in capital in a futures trading account. They're saying, look, you're not maximizing that capital because you're only really utilizing 300,000 of that on any given day. So really you just need, you only need 400,000 in there because you're never, but then there are times there are those moments every quarter where you do utilize up to 600 grand or 700 grand to get yourself out of a trade. I don't do it so much anymore. I've learned the lesson. So then I do get railed over the coals, like you're underutilizing capital or you're misusing capital.
Yeah, move some of it elsewhere to generate for you in another.
Yeah.
Yeah.
Because it's sitting there idly. It's sitting there idly 90% of the time. So then, either trade differently or, why you letting capital sit there idly for 90% of the time? We go over our four portfolios too. So but generally that's the big feedback that I get from half the group that says that I'm underutilized. And then there's half the group that says, I can't argue with that you haven't had a losing day in over X amount of days, over 2 years or 3 years. And then you have two, said, I can't argue with your P&L. Like I can't, there's one person that says, I don't, he doesn't know what advice to give me because you can't argue with the P&L, right? So it's like, it's, I've got one of them to adopt the RDA,
That's fun.
major hedge fund. Major hedge fund. I wish I'm waiting to see whether or not I can do some videos with them. A kind of a family hedge fund firm.
I think your GC's giving you some more gain.
Oh yeah, I did get knocked out at 3, so took some profit and then probably should adjust that. Yeah, but to your question, earlier, that it was 2 simple signals and then just taking the trade. That's the biggest thing I would implore people that they need to start doing is just look, find the elements of the trade system, of our trade system that you're trading, that you're adopting, that you like, that you find comfort in as much as you shouldn't, and trade those. And that does take some chart time because you have to say, okay, let me understand the system, let me understand, and then trade the ones that you predict time and time again, and then just manage the trades. That's the biggest thing I could say that I'd wish most people would do, because I think that's what most people are. They're but maybe I'm sure there's a host of other psychological issues that's leading into why they're not taking the trade. I mean, where are you at and everything?
I'm getting through a couple videos a day, working through different sections of your training. I'm dying to get to the tail-end portions, but you make it very clear, don't do this until you've covered these. So I'm trying to be obedient.
Yeah, it is tough.
Probably the biggest challenge is, so many years of looking at EMAs and signals one way and then making the shift. I was thinking about it last night. For example, I've been, drawing what I've referred to as levels for myself for probably the last 6-8 months, where I really figured out, hey, these are key levels where things happen, but I would only use them as targets. The idea of using them as potential entry points honestly never occurred to me. So, seeing the way your system unfolds has been enlightening, to say the least, and basically lets me know that I realize levels were pretty cool, but they're the core. That's where the market moves, and identifying them is critical. And you do trade off of them. So I don't know. That's maybe simplifying things a little bit, but it was quite the epiphany for me, and one of the biggest reasons why I knew that you were on the right track, and at least it seemed to blend well with where I was going. And the biggest thing for me is just trying to collate it all into trade executions and feel confident about it. So, but that's time, practice.
It's time, and that's also is a holistic thing. I mean, that's one of the things is that it's, that I think, well, I know that a lot of people they want a series of signals to align and everything else, but it doesn't always work that way.
No.
Really, it is more like what we mentioned before. It's 2 or 3 things that pop up that correlate, which is enough, and then it's just taking the trade and managing the trade, and then also not as new information of the charts unfold, you're not arguing with that new information. You're not tied to it's got to go down or it's got to react here. It's more of, it's also doing the thinking of, okay, well, I could start over. So if I am wrong here, this is a good place to get out, maybe with a little bit of profit or a little bit of loss. And if I am right, I could always just start over. So there's that aspect of it that I think a lot of people miss too, which is just being fluid in your thinking and fluid in not even caring, not even really not caring. I guess caring is the best way I can describe it, but not have ownership in the idea or in the direction of the market or in whether or not you're just there to pull capital out, and you're predictive and reactive at the same time. I think that's the hardest part.
Yeah.
Well, you said it. Hold on.
So here's a scenario question for you that I've come across, and maybe it just has to do with the way I'm interpreting the chart. Let's say it's momentum short and bias short, and you're approaching a level. How do you plan to, and how do you utilize that level as a trade? Is that because you're already momentum and bias short? Do you just stay out? Do you enter looking at that level as a target? Do you use that level as a potential start to join the move to the downside? Or do you understand what I'm saying?
Well, it goes back to kind of the original question you asked about the gold trade. Is the same thing, which is I could have traded up to that level, and then when that level hit, see, the system is all about predictive reactions. So a level is a predictive reactions. Various indicators are predictive reactions. So when that level is coming up, if I was trading down or up to that level, I would have been taking profit because I had to predict a reaction, at least some reaction. And then there's only really there's only three ways to enter a trade, which is, you scale in at that level without waiting for confirmation, or you wait for confirmation, or you enter and then you put a protective stop. So there's only three ways. That is a fade trade at that point in time on some charts, not all charts, but some charts. You do know there's going to be a reaction there. Very seldom is there ever something we say in the system that, hey, expect a reaction, and there's not a reaction. And that reaction might be minuscule. It might only last for 10 to 15 seconds, but there generally is always a reaction. The size and time frame of that reaction is what really you have to kind of measure. But then, so it's really just figuring out which three of those I like to be in the trade at that level, like on GC, on the gold trade, because I've seen it play out time and time again over that's 6 years plus in my system. And then sometimes I will add on a confirmation when maybe chart 2 rolls over. But even then, you're still in a fade on a couple other charts. I think that the biggest thing is that just the biggest pitfall people have too is when you're trading to something like you described, is thinking that you have the runner. Like, oh, that level's going to hit and it's just going to sell off from there. Now it might, like it did here in gold. I mean, that's a pretty decent sell off from that level. So this trade's it's almost perfect on where it actually decided to pivot down that entry. But also I've already took 3 off. So I've already took, and then that's the other thing. I could have held the total 9 lots on that trade. But just being a good steward of how the market works, I took 3 off just because you don't want to fall into the fallacy that you got the runner. It's good if you do. So I don't know if I've answered or I talked around your answer or the question, but that's the answer. I mean, did I answer it?
Well, you answered it. Whether or not I feel confident in that situation.
Yeah. You'll often see I will take trades that maybe don't make sense when you're looking at just the 5-minute, but I'm usually using chart 4. Like chart 4 levels are gold. So they're typically, when they get tested, so for instance, if you look at on the NQ, just a recent chart level, if you look at 298 spot 25, and I'll share this. So if you look at 298 spot 25, That was a recent level created on the chart 4 of the NQ. Well, price came down to test that 1, 2, 3 candles later. And that level is gold. I mean, you'll see this happen day in, day out in the market. So here's chart 4. I shared it on the general. And then if I share chart 2, that yellow level, I mean, it didn't exactly tap it. I don't know why it's not loading. But it didn't exactly tap that yellow level, but it came really close enough within comfort, where there's 2 ways to trade that. Number 1, there's a recent level created on chart 4. It came down and test that level. First test, you could have got in on that test saying, hey, look, if I'm going to enter at this level, and if there's a close on chart 4 below this level, then this level is not going to hold. That's how you would trade that. Or you could have waited to about 11:10 market time, 4 or 5 candles later, and you'll see on that last chart I shared that momentum shifted over. That could have been your entry at 15314. So you could have got the best entry right around 15301 using predictive aspect of, look, this is a level test. The level's going to hold. Here's how I'm going to manage the trade. A close below this level on chart 4, I'm out of the trade. And maybe even I'm planning to scale in below that level for an overshoot. But once there's a close below on chart 4, I know, or if it just moves at a speed where you should be out of the trade, you're out of the trade. But that's how you trade that. That's how there's a level there. You're predicting the level and you're predicting the reaction. But then if you want to wait for confirmation, your confirmation is at 314 spot 75. Momentum shifted over. And then you got greater confirmation when at 323, momentum shifted over and price recaptured the RDA on chart 2. So, and you'll see my entry on this is right at 329 because I missed that pullback. But what I've done is I've set up kind of my entries for a pullback to that entry at 329 was a pullback to the RDA. That's where I got picked up on chart 2. So, but I prefer to trade it the first way I mentioned, which is like, hey, here's a strong level and it's pulling back, or here's a weak level created on chart 4. Levels on chart 4 are typically gold. It's coming back to test it here 3 candles later on chart 4. I've got to take that trade. There's going to be a reaction there because I'm going to get an opportunity to manage myself out of that trade at a minimum. And at a maximum, that's going to be a level test that's going to hold and then continue back up in the opposite direction. Yeah, I would look at because of the, you look at those rejections on chart 3 as rejections, but I look at it as intention. Intention because both of them overshot the RDA. They are overshoots. They did close below the RDA. But what do we also know? We know that the weekly open is within reach of today's range. So that to me, I mention the weekly open quite often because look, it's the number one magnet that if it's in play in the day you're trading, it needs to be on your radar as far as a magnet to where price wants to go. So that's, to me, I know I'm being a one-track mind here, but it's really not that hard. Is the weekly open in play? Is there proof that the weekly open is still in play? Yeah. Because it hasn't solidly sold off. I mean, it has sold off that if you're trading bad and you're not trading predictively, you're on the wrong side of the trade. But it hasn't really ripped down like some of the alphas. Like, for instance, if you look at the candles that actually broke the levels, it hasn't ripped down like that. it actually is pretty reliable for what it's doing in a changeover pattern on chart 3 because it's in a changeover pattern where momentum's trying to shift and the pullbacks really have come back and just tested momentum. And it's a fight between momentum and bias with the intention on chart 3 showing the attention is higher. There's that phrase, if it prints there, it will trade there. I say intention. I use the word intention, which is those rejections on chart 3 are intention that the market wants to go higher. They should be looked at as arrows because of where they're happening on the chart. Look, just because those happen doesn't mean, but they're happening at a significant area where what do you have? You have momentum shifting over, like you mentioned, or someone mentioned before, pre-market. We have a stair-step pattern from the overnight on chart 3. And that move is happening right at the RDA. So you look at them as overshoots, but at the same time, I look at them as arrows pointing up that the market wants to go up, to the next level on chart 3. And what's the next level on chart 3? It's a breakdown candle, breakdown area right around 500, 498. Between 487 and 508 is really the next zone that you would look at. Well, it has to obviously get past 400. That's the first thing it has to do. So the immediate level is 400 on chart 3. And then after that, it's 50% of that alpha at 430 spot 50 on chart 3. After that, then it's 500.
Bias, but not really yet confirmed. Because it could still close below it, right? It could still have a reaction shoot.
Yep.
But knowing that it's bouncing between those levels, I guess, I mean, in hindsight is obviously easier, but better to have gone along with the momentum. Just trading between the levels is imagine a good thing too.
Yeah, but I would even take it back a step. Look, what's the most important level that's in play right now?
Right now,
Yeah, for the NQ.
it is the RDA and the CQ that it's working with. It's already about it.
I would argue with you there. What's the most important level in play for today's price action on the NQ?
As a target, or is it
Yeah, that's controlling the market.
it's controlling? Well, it's where we're coming off of right now. The open. It tried to go to the open and it didn't reach it. So, like, yeah. And then the other thing is the mid at the opening range. It bounced off of that. I would say C1 is a good control right now. But yeah, it
So I would say, and someone else could pop up before I say it if you want to, but I would say the weekly open from what's the most important thing. If this was a battle, I've been listening to Band of Brothers and stuff like that. A lot of interesting stuff and some of the Roman stuff. But if this was a battle and we're on both sides, the enemy's on one side, and there's a river and there's a bridge that whoever controls that bridge controls really this region. The weekly open is the bridge. And obviously the enemy's wired it for explosives. And then, so that's the way I would look at it is the bridge, the weekly open is the most important controlling factor of today's trading day. I woke up looking at that with my pre-market analysis because the setup of the daily as well as is the weekly open within true range play of the range movement of the NDX and NQ, meaning is it feasible within the most recent 20-day range candles that it could tag the weekly open?
But then you also have the daily, right? I mean,
Oh, yeah.
bounce off.
Yeah.
Oh, and you know what's weird is if you go on the weekly, we bounced off of 1.9 on the weekly just today or yesterday, I mean, which is kind of crazy.
Yeah, you could.
So
And
we bounced off.
go ahead. Sorry, I didn't mean to cut
And
you off.
then on the 1 hour, on the CP, the 1 hour, there's the 200 moving average. If you bounced off of, like we went up, that was 380, 385 cents. So that's also important, I would say, because that's a big important psychological level before the weekly open.
I would agree. But what I would add,
Both of it hard.
yeah. But what I would add is one of the things that I've learned to appreciate with the system and not trying to brag about it is that you can get to the right answer usually multiple ways. Like that's one of the things that I've learned to appreciate about the system that I've developed is that you could use the weekly and get almost to the same answer as I got to without even using the weekly. Right?
It's not obvious to me that the weekly is the most important level today. Like I don't know how many other alphas have that, but
Well,
I appreciate the analysis. It's just to me, it doesn't still click. Maybe I'm not used to thinking that way.
no, I mean, so look at it this way. Okay. So I'm going to show the chart. So I'm showing the chart. Okay. So let's look at, so we have the ATR. We have down below on this chart is the Rexdog ATR, which is an indicator that we're still working on releasing. We're working out some of the kinks. But the Rexdog ATR is saying that 229 is the movement. Now, if we use the tool to say, okay, 229 puts us at 15,492 on the open today. That's within the range of what the RDA or the Rexdog RDA. If we take the lowest ATR, well, let's just take the last 2 days. That is a range of 150. And then this range here is of 198. So let's just call it 175, right? So 175 puts us at just shy of the weekly open at 442. The weekly opens at 463. So that's just using simple analysis. And that's what I mean. Is it within range?
That's actually a very good point. So basically, you're taking into account the likelihood, like nothing is guaranteed, but the likelihood that the market moving X number of points gives you another reason to take that level as an important.
Well, it more is it in play. So for instance, let's say that we were down here at 080. Now we know that when we're below the weekly, okay, let's say we were at, let's say that price right now. Let's say the market, instead of opening where it did, opened at the middle of the previous candle at 5112. Okay. So let's say we opened at 5112 today. Now, how I would analyze that is both. Now, we know that because we're below the weekly open, that acts as a magnet and price is attracted to that. But we also know there's another weekly open and an alpha candle here that's within the range of the downside sell-off at 5037. Then I have a conundrum as far as me thinking. And that's where I'm looking for clues, which is what's happening as if price impulsed up, but then sold off. I would be thinking, okay, well, what's in play is the previous week open because that's within the range of being tagged today. It's 175. So if today would have opened at the middle or even breached this previous candle at all, I would have been saying, I would have been preaching the opposite today, because I would have been saying, look, the weekly, like, what do I say? The market moves level to level. Weekly opens are very important levels. So it's either going to go, it's very simple, it's binary. The market is either attracted to the upside weekly level or the downside weekly level. And it's just trying to figure out what is the clues of the market telling me, which one do I want to actually trade against based on the reaction of the market and looking at the 4 chart setup. Is that clear? Or does that help define it a little bit more?
Oh, yes, yes. Thank you. Yeah, yeah. No, it just wasn't like at first when you said weekly. And in general, it also comes with the fact that there's so many things to look at. And right now, I rarely scale out to the weekly because I'm already looking at 4 charts plus the daily, so 5 charts.
Yeah, but look at my setup though. The setup that I use
Right.
has the Rexdog key levels. I don't even need to look at the weekly. I just have them on the chart. I just see them.
Right.
So part of it is, I understand that I've been using the same system with the same levels and the same colors, and I know what I'm looking at within a half a millisecond of looking at the chart. And
Right.
some of you are
Do you mind telling what indicator are you using for the weekly open?
yeah, so that's an indicator that's free. It's called the RD key levels, RD Rexdog key levels. It's on TradingView. And that maps out the daily open, the weekly open, and the previous VWAP.
Okay, and suddenly I feel like I was blind up until the analytics of the chart.
Which is another thing. So see this little, well, you might, if you're watching the screen, this little teal line at 383 is a previous VWAP close. This is actually a reaction level. And you notice as prices got up here, which correlates to a zone, but it actually acts as a reaction level. It's a previous, what it is that's where the day closed on the VWAP, and those are reaction zones.
Okay, but so are you looking at the NDX?
Yeah, I could be looking at the NQ. It's the same thing.
It's the same thing, it's just the price was different. So
Yeah. I mean, right now, though, the NQ, here's the other thing to keep in mind. The NQ is above the weekly open right now. So the NQ itself is above the weekly open. The NDX has a lot. I mean, it has about 109 to get to the, not ticks, but 109 dollar to get to the actual weekly open. But right now, the NQ that opened on Sunday, the weekly open, which is predictive, it has been recaptured.
But I don't see that. Like, isn't that the 517?
No, the NQ is 521. The NDX is on the NDX 462. Remember, they're different prices, like I think you were talking about before, but
No, but I'm saying we're still below it.
no, we're above it. Right now, we're above the NQ weekly open.
I just added your indicator and it shows different.
Are you on the NQ or the N?
I'm on NQU. You're on NQ. Oh, so if you go to the NQU, because I think what you're looking at is possibly that there was a rollover of the contracts, and it's possible that you're not looking at the right price if you want to use the continuous contract.
Yeah, so I know that. So I mean, you can't trade the continuous contract, but I use the continuous contract because it tends to be accurate as far as what's happening for plotting. But then when you see that I'm trading, like so for instance, you are right. And this is where it does get a little confusing. Actually, I would defer to the NQU, which we haven't reached the weekly open.
Yeah, I think that's more correct because Q is NQU.
Yeah.
Just when there's like a big gap between them, it's just gets wrong price.
Yeah, so you're right. So we're not above. So, but we have about the same. If you look at the same percentage, this is the one thing that I think you were talking about that I'd like to have is to understand. Okay, we got a percentage movement of 0.67, 102 points to the NDX to the weekly open. Does that match the weekly open to the NQ, which is about 160 points? Which is, you know, I've always wondered, and I haven't been able to figure this out, but is how do I correlate the actual cash market to the actual futures market as far as projected moves to like these key levels? I've never been able to figure that out.
So but it's easy actually. Like I said, you just have to use the difference between the levels at the moment. And like I was mentioning earlier, if you use a formula, you could actually plot the NDX in terms of the current future contract price. And that I think would be very useful because then you can project all the NDX levels in terms of the current price of the contract. The only thing is when I did it as a formula, because when you do it as a formula, some of the data like volume or whatever probably gets wrong. And so the RDTS indicator is not working for me. So I need to probably work on that. So let me try and see.
All of the indicator or just certain parts of the indicator? Sometimes if it doesn't have enough.
So yeah, it shows me an error. I think this single result error extended blah blah blah. So you somewhere in the study in the source code, it's using the symbol, but the symbol because being a formula, it's not able to. It's trying to look at earnings or something like that.
Trying to look at what?
It's kind of earnings.
Oh. Oh, that's because it's still using the old VWAP code. That's why.
Yeah.
So that needs to be updated to use the VWAP call.
Yeah. So my point is the RDTS the indicator. If you probably have some code that's not even needed because there's no earnings and futures or anything like that.
Well, I mean, when you do the typical when you take the actual TradingView used to not have the VWAP function, or their VWAP function didn't work. So then what you had to do is you had to take the actual how the VWAP is calculated and put it into your indicators. And then that's the only way you could get VWAPs.
The VWAP uses volume and the NDX index doesn't really have volume because it's an index.
No, I know, I get it, but when you look at the calculate, I know because I went through with my developer on this to figure this out to get it to work. When we created the Rexdog Foundation, the only way we could get the VWAP to work on everything was to actually copy the underlying VWAP code, which has a lookup. It needs to be updated. You're right, because that was written in version 3.0. We're now on version 5.0 of PineScript.
So my suggestion here would be to make because your code is not open, right? And I mean, if I had the code, that's probably be able to just fix it. But my suggestion would be to add another parameter where the symbol that you're looking up, I can enter manually, so that when I put in a formula, I can say, hey, for the view up, use the NQ1 whatever, or like, you see what I'm saying? And so that would fix that problem.
Well, no, I think that the fix is actually to use the built-in VWAP, because the built-in VWAP function now on Codebase 5.0 of PineScript fixes that behind the scenes. So, and I can share the code. I'll send you the code so you see it, so you can maybe you might be able to see, because the developer I used to use had a life epiphany and does something else. I think he's an artist now. So I don't have that developer anymore, and I haven't. I'll send it over to you though. Yeah, which is good for him. I mean, I'm glad.
So anyways, I mean, yeah, sure. Like if you the thing is the RDTS is not it's not hard to do it yourself by just adding the RDA and then all the averages to get pretty much the same thing.
Yep.
The only thing is the ATRs around that you still need to. It's not not that complicated to do, I guess is what I'm saying, and then you get the entire arbitrage set working on the formula.
Yeah, I'm looking at updating it anyways because I'll send you over the code to the ATR too. I think I'll send you over the code to the Rex Dog Market Bias too. That way you can see some of the things we're working on improving. Just get your thoughts. So I'll send those over here over the weekend.
Okay, yeah, I have about 2 weeks of time, so I can probably.
Yeah, and if you get to it, if you have thoughts, we'll conversate offline about it.
But so anyway, so I'm looking at the daily in terms of that formula it's telling you about. But yeah, unfortunately, I can't. Yeah. Wait, you have just the RDA, that's rate stock average. Okay.
You have two. There's one just Rex Dog average, and there's one with the extreme bands.
No, there is one with this. I don't think I have that other one. Anyways, I was trying to see if I can get some more of that stuff without the one stuff problem. If I turn off the V1, would that work?
It might be embedded into the code. I'll like I said, I'll send it over.
Yeah, it calculates it regardless, right?
Yep, yep. And there's no, like I said, I know I now understand how to fix. I think how to fix it. Plus, I didn't fix it yet just because it's not doesn't come up. It comes up every now and then it only comes up. So sometimes on combined signals, like on my combined big tech, it calculates it because all of those are symbols with volume and they're not calculations. But when the second that you do like a calculation, like this divided by this, it then gets confused. I mean, the other chart that I use too that I don't show anymore because it gives people headaches is this chart here, which is the Rex Dog Maximus. And what this has, I know it's difficult to read, is it has every the slow momentum, fast momentum, RDA, and mix 200 as lines on here. Now they're labeled. But what you're seeing here is that we're about to recapture all of the actual daily 240 and 60 momentum and bias indicators. The second we get above 567 on the NQ, and I probably should use the NQU, but the second we get above that, we'll look at the NDX. The NDX is above pretty much all of them. The second that the NDX gets above 349, it's above every single reaction and momentum indicator on a higher time frame. That's the 60, 240 daily and weekly. So, you know, you basically have momentum and bias on the long side screaming, you know, that it still wants to go there. Now it's still a mess getting there, but that's one thing to look at.
But there's a lot of levels to work through.
Yeah.
I mean, it's a battle, but then it's explosive once it does, right?
Well, yeah. And if you look at the big tech is above all of the rolling VWAPs, the 10-day rolling VWAPs. So big tech really did come down, get below all the rolling 10 VWAPs, but now it's above the weekly open. It's above the RDA. It's probably trying to do another VWAP test here on the pullback. And then will it hold up here in the rest of the lunch session is really the key.
I'm thinking about going long here, but
So I think the trade probably is probably scaling in down to the OR 50, possibly, and then because that matches what the big tech is doing, and then the VWAP, and then the slow momentum holding up on big tech, for then the continued move to the weekly open test. You can see here on gold we have a daily open. So it's at the daily open right now. It's below the weekly open, so really we go to the, it's good to hit down the 1940. That's kind of my target on the low for the week is 1940. So let's see if gold's going to hit the low for the week here. I'll try to at least stay in for at least 4 lots there, maybe get taken out here on 2, but I'd like to stay in at least for 4 down to that level if it does get down there. What's up, Jack-o'-lantern? Such a lazy dog. I've never met a dog more lazy than you. Getting old, Rex? Almost had his cast coming off. I'm going to do this. All right. What was I doing? I was doing something. I don't remember what I was doing. P&L today so far is 19,696, open profit 5,970 plus 1440, so about 7,000 in open profit. So light day today, right around 26,000. If I were to cash out now. None of my pullback entries got picked up there. on the NQ.
Looks like we bounced off of the M9 on the one down.
Yep. Yep.
So we could go further down. I still think this might be a good place to sort of scale in all the way down to the 50% opening range.
That's where my entries are still. I mean, you see that my entries are still there. So
Oh, no, I wasn't looking at your stuff, but I'm roughly on the same page.
yeah. And we're about to get the hour close, so we're about 6 minutes there. So right now, in about another 3 minutes, we'll expect increased volatility over the next, increased volatility over the next 8 to 10 minutes.
So I gotta say, it's very nice and reassuring when we also start to see things the way you see them, and like sort of have these aha moments. And then I think the next step.
I'd agree. And I'm actually very excited to see more and more people start to get to that level. Very nice. Can't say it like what's his name says it, but I do think I'm seeing growth. I've been seeing growth the last 3 months continuously. And, it's frustrating because I know, it's time. There's not going to be a time where you're not going to look back and say, oh, September 3rd, I got it. It's kind of like you're building, I guess it's like you're building the pyramid. If you've ever seen the pyramids, if you haven't seen, well, it's kind of dangerous to go now. It's not really, well, if you're going to go now, I'm not going to go down that rabbit hole. I've seen the pyramids and it's amazing, but kind of envision your trading like the pyramids, which is build a foundation, you build the next level, you build the next level, you build the next level, but eventually you get to the peak. Now, with that, you can actually say, hey, I got to the peak. The problem with trading is that you never know where that peak is. And the peak, actually, the way to look at it is that you're building a never-ending pyramid, but eventually you get enough foundation where you start getting higher and higher. That's really kind of the way to look at it. So there's never really one point where you say, hey, I'm at the peak of it. But then what happens is that you start realizing that you're more right and you're more in tune with predicting what the market's going to do than wrong. That's what you start realizing. I think the other aspect of this is that I there's this chick trader. I don't know her name. I just call her a chick trader. I watched a couple of her, every now and then I do watch shorts on YouTube. It's kind of got me addicted. But so I watched a couple of her shorts. Now YouTube thinks that I want to watch all of her shorts. But she does a strategy where it's a trend line strategy. I don't know her name. I probably should check her name. But she said something on a recent short that I saw yesterday, which is she had to realize that on her strategy, because it's a trend line strategy, that it's a low probability strategy, and that she's going to be wrong 7 out of 10 times, which to me is asinine. Why would you trade a system that's wrong 7 out of 10 times? But hey, to each their own. So she knows that her system is wrong 7 out of 10 times, which actually means, if you think about it, and that means that she has to show up all 10 times. I would argue that our system that we trade is not wrong 7 out of 10 times, because to me, if you have a system where you like, I understand the thinking that she's trying to portray, which is like, look, you need to understand the probabilities, which is if you have a trade system and you manage your trade effectively, you can lose 70% of the time and still make money. Okay, that's great. I get it. But that also means that you have to show up 10 times to be part of that 30% that wins. That doesn't, those numbers. Now, if you're showing up every day and taking every trade, that works. If you're not showing up every day and you're not taking every trade, those numbers do not work. So that's I think one of the big missing, like, she's speaking wisdom, but she's actually speaking wisdom that actually is faulty wisdom. Because if you have a trade system that is only right 30% of the time, in order to be profitable, you have to show up every 10 times, and you have to have the mental capacity to deal with 70% losses, which is, look, if you understand the probabilities and you understand your system, great. But to me, that means that you have to show up. I believe the system that we trade, you don't have to necessarily capture 10 trades to have your probability. I think you can capture less than half the trades and still do well. It does come down to trade management, and it comes down to what you like as the highest probability trades. So that's I don't know what got me thinking about that, other than you have to realize that. You have to realize each one of you're adopting the Rexdog trade system. You're going to have to figure out what trades of the Rexdog trade system on which control chart you like the best. Like, they're the trades that you would do time and time again. And then what you have to then think about deeply is that, okay, this trade that I should take no matter what, how often am I available to take that trade? And how often does this trade come across on an average day that I'm able to trade? And then look at it from that perspective. How often do I have to be present to execute this trade? And then what's the win rate of that trade? Is that too high level of a discussion for a Friday?
Yeah, not really. I mean, what else are we gonna do?
Yeah.
Like overtrade? Okay, so
Well, and that's where you can, and you can super scalp trade and do the same type of thing and use chart 2 and really super scalp trade between levels and key things. If you were to follow me a year and a half, 2 years ago, that was my style of trading. I was really aggressive. Now, you notice I've kind of, or maybe you haven't noticed if you haven't been following me, my trading style now is kind of what you're seeing on GC. And I'm tracking the NQ closer, but the other ones I'm looking, and somewhat on the NQ, I'm looking for more intraday swings. And if you look at probably my P&L, which you can go to my website, I think I'm over 3 million now for the year. That's just tracked live streams. So that's just stuff that I've either been very active on Discord, or you can go back and watch every stream of me making that. I think what you'll notice is that my hold time of trades is longer now than it used to be, because I'm more interested in not watching the chart so much and not being hyper focused on doing aggressive fade trades and looking for more of the mark. Our system provides you with 4 to 7 high probability intraday or interday. I need to figure out always which one to use, but day trading swing trades, 4 to 7, if not more, but usually 4 to 7. There's usually not less than 4. And those are 4 pivots, 7 pivots in the day that are very clear, obviously in hindsight, but that are, as you use the 4 chart setup, are clear once you understand how to read the 4 chart setup with confirmation, at least 4 to 7. So my trading style now is to capture more of those 4 to 7s and not trade in between those 4 to 7s.
yeah, that's beautiful. Because when I look at my definitions, it's just insane. I mean, I would think, and it's not consistent. I mean, I have a lot of crazy days where I'm just trading between the levels and you get almost 100% win rate. Amazing. But when it turns against you violently, it gets very tricky. And that could give a few days worth of wins.
Yeah. Well, like today, well, right now where we're at, if you look at chart 4 as one of your controls, we're kind of in an interesting area because we've got a weak level at 366 is the NQ, 366, and then we have another weak level down below that's been previously tested at 297, and then we're bouncing off the RDA on chart 4. So, and then also in chart 1, we're also bouncing off the RDA. So I'm positioning for an overshoot of the RDA, scaled on a little bit greater. I probably might get an opportunity here on this push up to maybe get out at break even and maybe start over, which I might take because I just started a little too aggressive on this trade on the NQ. I'd like to see a close above the RDA and the slow momentum on chart 2 at 340, but it might not get up there. But so I'll have to make a decision here in this trade here. This is what I mean by trade management too, which is the right thing probably for me to do is not to hold this position. If it gets back up and it gives me an opportunity to break even, get out, and then start over at a higher level where I get confirmation instead of staying in this trade, which is probably what I'll do. So I'll probably end up doing that here. Let me see what happens here. So right now we're at that. I'm in profit about $375. I got out because I'm just too heavy at 18 lots. It's not that too heavy, but look, we don't know for sure whether or not chart 1 and chart 4 is going to hold the RDA, or does it have a lower level to breach?
So I find this very interesting that you mentioned earlier that you get something like 3 to 4 swings at the minimum a day. In the trainings, I don't recall seeing any. I think you talked about it, but I don't recall seeing anything about particularly how to approach the training. And I think you were talking about potentially doing something on it.
It's in there where it's at. It's more towards if you go, and I'll share this. So it's more towards. So number one, this is I think what I realize that I need to highlight more, and we will work going forward, which is if you're following the system, you're automatically capturing those 4 to 7 pivots anyways, because you should be taking a trade at the RDA. You should be taking a trade at an RDA test on chart 4. Like right now, you should be thinking about going long. You should be looking at how do I get long, because we've got a test on chart 1 and chart 4 on the RDA. And you what? Yeah. And then in the alpha den, where you're going to see a lot more of this is in the trade recaps. You're going to see this be developed a lot more. So that's where I would suggest if you want to understand more of and you'll notice, so on the first video of that page, and I've done some of these grades on YouTube. So for those that are not following along, you can see some of what I try to do every now and then is grade the system, not how well I trade the system, but how well the system provided very clear trade setups that you should have took if you're trading the system with confirmation. And we give an overall grade, and then we give an overall trade. So for instance, the first video on there from 3/29/2023 is that the RDTS, the Rec Stock Trade System, the grade was a B+, meaning that the confirmation of the trades were at the higher end, that they provided confirmation and they were clear. And then there was 5 momentum trades that were really clear and 3 fade trades that were really clear. So on that day, using the 5-minute chart 1 as your control, and then looking at the other 4 chart setup charts, you had really 8 pivot points to trade off of on that day. I just shared the link in the general. So for alphas, you can see that. So for instance, on 1/11/2023, I did another grade. We had 10 high probability trades that day. 7 were momentum and 3 were fade. On 1/17/2023, we had 5 high probability trades, 2 were momentum and 3 were fade. You know, if I had all the time in the world, I would like to every single day be able to capture these numbers, because these aren't objective. They seem objective, but they're not really objective. They are, but they take about 5 to 10 minutes to actually grade, because what we have to do is we have to start at a control chart, and then we have to look and say, okay, using the rules of the system, do the other 3 charts confirm that this was a high probability trade?
So what you're saying is that if you're just generally trading the system, you would still get those swing trades. But I don't know. I think there's maybe some nuance here. Like in general, how it's
Well,
just here's what I'm thinking. Like in swing trading, usually you don't necessarily capture the exact turn, and you start scaling in, and you have like a wider, like bigger tolerance for the stop. And wouldn't it be more like I would expect to see more fake trades being the swing trades? It's just
no, I mean, you have to look. So I know you think it's nuanced, but if you watch a couple of these videos, where some of these videos are in the 4 chart setup. So, and I break down every single trade in the 4 chart setup. And then that's when you're going to realize it's not nuanced, because basically it's chart 1 is the control. Does chart 4 back up that? And then does chart 2 provide confirmation? It's real simple. And then what does chart 3 tell you as far as, is there room for that trade to exist? And then the way that this grading works, and I have another post that we've done. Like I said, I know we release a lot of stuff, and I don't, but I've explained how we grade the posts or how we grade the system. And if there's any question that there's nuance in that trade, then it's not a high probability trade. So every one of these grades that I've done it's clear in real time, not clear in hindsight. I don't care about hindsight. I care about, if you're reading the chart in real time, are there clues in real time that you should have been taking these trades? And if there aren't, if it's indecisive, those clues in real time, then it doesn't make the fit for high probability trades.
yeah. Thank you for pointing those out. Actually, I've been meaning to go to them once I'm done with the whole training, but I feel like I'm never going to completely done because there's so many videos and a lot of them have replay value. Because every time I watch something, I learn something new, even though I only 5 or 10 times.
Yeah. And so, I'll share this. I mean, I've done posts exactly how we grade the Rexdog trade system. So, like I said, I know, and that's a YouTube video out there, and I share the philosophy of how we grade it, the benefits. Now, like I said, the only reason why this isn't done more is because I just don't have time. I just simply don't have time. And there's no way to automate it. Some people might say, well, couldn't you just automate this? Well, I'll just be upfront. If I could automate this, you guys wouldn't know me, because I'd have an automated trade system. And then you guys would not know me, because I would have a money printing machine that I wouldn't have to show up. Okay.
I think the only direction for this is semi-automation
Yeah.
to help with some of the more quirky,
Well, no, I've already figured out automation. So I'll share that right now. I've already figured out automation. I haven't figured out how to implement automation yet. So I will share. I've already figured out automation. I've already got it down. I already know how to do it. I've already see the end result. Whether or not I'm going to be alive long enough to be able to implement it is the question. I don't want to do it myself, so I'm not going to do it myself. But the universe has already implanted in my mind exactly how to automate the system. I already see it. I already know the end state of it. I already know how it needs to be done. I just don't want to be the one that's going to implement it because I don't have the physical time or the desire. I don't need to. That's the problem. I don't need to automate it. I can show up every day and live my life and pull capital until I'm ready to pull out my chips and which, like I said before, like I've shared before, I'd pull out my chips for about 60 days and then I'd be bored as hell. So, the problem, I was thinking about this yesterday because I plan to come back and sit down with my nephew and go over and start to knock out some of the new training and some stuff. And the treatment that I got just hit me pretty hard. And usually I would have pushed through it and said, screw it. But then yesterday I said, you know what? I should just relax, go take a nap, sleep it off, and just play it easy so I can kind of go into the weekend and enjoy time with family and want to barbecue this weekend. I want to do some fun stuff and hang out. And I didn't want to push it. But so I wrote for a little bit. I wrote in my novel that I'm working on releasing. I wrote it in a couple screenplays. I watched some YouTube. I watched some Peaky Blinders. But then I got sick of that because I was like, okay, I'm bored. I'm burnt out on that. And my mind started wandering just to trading, how to be better at trading, and what pisses me off, and I'm just going to share this up front with you guys, is that with cancer and I mean, I'm planning to live, I don't know, I feel like right now I feel totally healthy. I don't feel like I have anything, even with the treatment. I still feel a little waterlogged, but I was mad at myself yesterday because I had the day to myself in a way, and I could have been working on my novel more, but then my mind was stuck on, and this is going to sound bad, so I don't want anybody to feel bad about this, but I was more planning out training and new ways to approach how to teach people how to trade, where I kind of felt a certain way about it. And I feel bad about being honest about this, but I was like, well, shit, I don't know how much time I have left. And like, what should I really be spending my time on? Should I be really spending my time on trying to get all of my knowledge into the Rex dog? Because what I've told my nephew is that the goal for him being here is for me to take all of the knowledge I have of trading and get it all housed for the legacy of the Rex dog trade system going forward into the Rex dog site. And because I probably shared about 50% of my knowledge, because I don't share about my swing trades. I don't share about my Forex trades. I don't share that stuff. So I want to get all that stuff into the site. I want to get all of the thinking, not to confuse you, just to be complete. I just want all of my philosophy of the markets in there, and people can choose from there if they want to go deep or they just want to go light. But given where I'm at health-wise, which we're not promised tomorrow, I'm just being upfront about how I felt yesterday. I was just like, is this really what I should be working on? Is this really what I should be doing? Because from an ROI perspective, I mean, I appreciate everybody here, so I'm not saying that. And I truly, me trading with the group and everybody here makes it that much more awesome. And I'm very happy at the group and the people that I've attracted. But at the same time is the most valuable asset, and how you spend your time. And I just was not having second thoughts. I just was thinking, well, my number one thing is, if I were to have weeks to live, would I regret the time that I've spent? I know this is a deep conversation, but it just it hit me yesterday that if I went to the doctor tomorrow and they said, hey, look, it's advancing, you've got weeks to live, number one, I would say, well, your weeks is, maybe another year or two for me. But I would still have that attitude. But at the same time, that could come up for me at any given day. I asked myself, would I regret? Would I wish that I was spending my time and doing things differently? I know I'm getting a little deep here, but I mean, it just came up yesterday. So I'm not trying to make anybody, or I'm not trying to say that I regret the time here. I don't, and I regret everything I do here. Except to say, from an ROI perspective, I could make the argument that I spend way too much time thinking about what I do here from a straight up ROI of capital, but I can't replace the relationships of the people here. I can't replace what I get from having uh, the relationships that I built here. I mean, even though none of us, there's been one or two of us there. I've met one or two of you in real life. Uh, and I was trying to meet someone else in Florida when I was down in Florida, but we just couldn't make it happen given my time frame. But I'm sure I think as we move forward, we'll probably try to do some kind of in live event. I think that's probably what we'll try to do. Once I get 85 to 90% of my knowledge into the vault, which is Rex Dog Trading. So that's the goal of my nephew being here. One of the goals is to get 90 to 100% of my knowledge into the vault that is Rex Dog Trading. And then I would feel like, okay, I've accomplished the foundational knowledge that any type of trading you want to do, any market you want to trade, the philosophy of what I've developed, you could then build off of, you could use as a foundation. Anyways, I don't know what got me thinking on that level, so I'll do apologize if I got too deep there. I'm long. I'm trying to get more long on the NQ, and I'm short still, and gold is below the so we are targeting 1940 on gold still. I will think about, once it gets below 1940, I'll consider reversing. No, go ahead.
I just wanted to say I was listening. I muted myself because I was making some noise too. But I was listening. So thank you for sharing all that.
Yeah, and I don't want people, or what my main thing I don't take anybody's time that they spend here or attention or even you joining and becoming an alpha and for granted. I don't take it for granted at all. So I don't want anybody to feel like I feel blessed that we actually have a core group of people that show up every day and we're in the same mode of thinking. And like I said before, the last 3 or 4 months, I've really seen the growth that I was hoping for when I started this whole adventure of going out there and teaching other people how to trade based on my philosophy of of how I see the market. Like Banger took some of his. He actually did take a good example is he's doing funded accounts and he took a withdrawal. So and I saw today he shared in the alpha journals that I think he only did a 7-minute trade day and made $1,200 for a 7-minute trade. Not bad. 6 lots, 7-minute trading session, $1,200. So yeah, I think yeah, I'm long on 9 lots as well. Now we're hitting the 5-minute kind of level there. But it does look like it wants to take out the opening range high. Whether or not it'll do it now in the middle of the lunch session or not is, but now I'm at the point, I don't know if where your entry is, but I'm at the point where I should probably put some trailing stops in. Yeah,
It's decent, so yeah, it could keep going, but
I agree. That's an awesome. I mean, that's perfect trade there. With that trade there with the pullback at 348.25 up to, so that was, if you would have got in there at 11:22 and 19 seconds.
350 is when I got out in, and I got out at, okay, 360, so only 10 points, but still, I mean.
Oh no, awesome. And it's 2-minute trade. Yeah, I mean, you can do that. I mean, that's scalping 101. If you can do that all day long, I mean, which you could, but I mean, the other thing about scalping is that it does wear you out. I mean, when you're first starting, you kind of have that energy and that drive to do it, but I think as you trade on, you then realize that, hey, this is draining, unless that's just the way you like to trade, right? Yeah, I agree. And then my trailing stops are all within profits. I might get knocked out at a limited profit, then maybe re-enter. But you do expect a stall at lunch session plus maybe a double top of a rollover area. So, you know, it's well within the model to pull back to the RDA or even back to the momentum check at 345, right? On chart 1. So,
Okay, I was looking for an NQ.
I'm going to hop off here for a second. Well, I'll still be here streaming, but then Nephew Elite will take over for a little bit. But I think the trade still is long. It's just a matter of how much is it going to pull back here? Is it going to pull back to the OR 50? It is the lunch session, so we've got about another hour of the lunch session, so it could just range in this area for a while.
Yeah.
I would say chart 4 is still kind of a control. You got a level there at 327, and then you got a level below at 298. So really scaling in down to 327, 325, at least on the NQ, to me makes sense as far as the probability that it's going to lose that level in the RDA on chart 4, 327, 325 or so. The probability that it's going to lose that level, which actually aligns too with the RDA on chart 1. So while I'm in 6 lots long at a bad position, I'm looking to scale in a little bit lower uh, for that 325 level holding.
Well, thank you for coming on here. It's really helpful and really appreciate it.
No, thank you
Thank you
too.
so much.
I appreciate the questions and also, the feedback. I mean, it's awesome. Like I said before, I'm seeing everybody that's showing up every day. I'm not seeing anybody not growing. It's just, I know for a lot of you, it's frustrating because you're not growing faster or fast enough that you think you should be growing. But there isn't anybody that I'm not seeing that's showing up regularly that isn't having growth. And anytime I can provide some corrective feedback, I do. But that's one of the things that's exciting me most of all is that I am seeing consistent growth on everybody that's showing up. I'm trading a bunch of accounts. So we'll see how this works. Oh, nephew Lee, are you there? You ready to? I think next week it's live capital. So I think you're ready, right? I want to look at your demo stuff, though. I would like to look at your demo stuff, I should say. So I'd like to go over the P&Ls over the last couple weeks and just kind of see where you're at. So we have a baseline. Oh, come on. Okay, daily open. Now it's a matter of whether or not the daily open is going to hold. If the daily open doesn't hold on the NQ, it's going down to at least 5232. That doesn't hold, then it's going down to 193. So now it's all about the daily open right here at this reaction zone. Just relax, buddy. Just relax, little homie. Hey, anybody in the room? How many people in the room? So I think one thing we'll start planning. Okay, we'll start planning towards is. Oh, sweet. Let me take off. Let me take off the mixer and let me go back to Rodecaster mute, back to a mic. This sucks because, you know, Discord doesn't make it easy for you to change your audio setup. Okay, someone say something again, please.
Hello.
Okay, good. Okay. So I think what we'll do is maybe we will. I mean, we're going to get into overdrive here with my nephew now and me in the same spot for a while. And like I said, my goal is to, I told him this, and I'll tell everybody this, is to get all of the trading knowledge that I have into the archive that is the rexdogtrading.com, and then organize it and to tag it so that it's easy, interlinkable. We get option. I mean, the last thing we're going to do is options, because that's the last thing I really care about. But, you know, I do options trading. Every now and then I get I don't know, every 4 or 5 weeks, I just like, you know, I should do options trading. So I'll pull up an options chain on stuff and trade a few options. But I want to get, the goal is to get there's only 4 time frames of trading. And I want to get all of those in. I want to finish the training on going from job or stable income to trading as your stable income. I don't know. There'll be a sexier way that we'll call that. The other thing I want to work on, or that will be complete, is the mindset book and accompanying audio book and accompanying training, which is different than any other mindset stuff that's out there, which is, it's not going to be a series of worksheets or here's how to do it. It's going to be, here is the single answer to solve this problem. And you can argue with me all you want, but you'll be wrong. So that's going to be the philosophy of that. That's our goal to kind of get through all of that. And then from there, it's just, once all of that is there, and what I feel is lacking is I don't provide enough guidance at the Rex Dog Trading on other than day trading type of style of trading. So I want to complete that, meaning that there's only 4 time frames of trading that exist out there. That is, and just like there's 2 type of trades, there's momentum and fade. The 4 time frames of trades, and what I want to do is my nephew and I are going to holistically put this into a plan of how we're going to release this new training and our next phase. And then I would love feedback from alphas, and I guess we'll probably get feedback from the group as well. But alphas are the ones that have the vested interest, obviously. But before we start and sit down and finalize it and start creating the training, which I already have, I could sit down and just spend the next week and create it all, but I would prefer to do it with feedback. But it does start from the foundation that there's only four time frames of trading, which is day trading, which is what primarily the system is centered around, but it's not, because you take all the philosophy that I teach and you'll see as we roll out, the philosophy doesn't change. It's just the time frames and how you look at it. The further you move along the time frames, and the four time frames are day trading, and then within day trading, there's two types of day trading. There's scalping, and then there's swing day trading, where basically you go flat every day, but you're looking for pivots on swing trading. But day trading is one, and then there's swing trading. And I break this up into two because it is distinctly different. There is swing trading, which is short-term swing trading, which is what I do with Stock Fetcher. And I'll finally get all our Stock Fetcher out, all of our Stock Fetcher scans and everything out to the group. But that is anywhere from 2 to 12 months of trading that you plan to be in that trade. That is a short swing trade. And then you have long-term swing, which is anywhere from 12 months to 36 months. I'd say 5 years too, but I'm limiting it at 36 months. And then what you have is portfolio trades. Now, portfolio trades are things that you would probably want to even own and use as part of your wealth acquisition, that you would use it, without getting too into detail about how you would use it. But portfolio trades are stuff like, I should own Apple. Everybody should own Apple. Everybody, these are the things that you would want to maybe pass down as a portfolio, or things that you would have in a portfolio. And the way that you approach portfolio trades is the only time we will look at fundamental analysis. And those are the four. I would challenge anybody to argue with me that there's another time frame of trading that exists within what I just mentioned, because that covers. And here's the thing: how you express those trades are different, obviously. And what I mean by that is, you might use margin on some short-term swing trades, but you wouldn't use margin on a long-term swing trade. You might, use an ETF on, and I'm getting more into other markets beyond futures and everything else, but I do a lot of this type of trading, but I just don't share it just because, look, there's limited time. We've been streaming. I didn't plan to stream all day today, but we've been pretty much streaming the whole day, and we probably will. At the end of the stream, we're just worn out. I'm just worn out. I just want to kind of so it's like, when do I go in and infill the other content, or do I stream less? And that's probably what I should do, is stream less and then say, okay, let me take care of the 3 or 4 things that should be released. But then it feels more like a job. And I do this so I don't have a friggin' job. Okay. So the more that this feels like a job, the more that I'm not going to do it, and I'm going to do it poorly. So I'm walking that balance, and both me and my nephew and I are walking that balance between this feeling like a job, because we do this so it's not a job, and also giving support and adding and rounding out the full knowledge base so that you can trade any style with the Rexdog system. Here's something that, if you haven't heard me say this before and you're an alpha, or you're number one, if you're not an alpha, you should become an alpha. You need to contact me today and become an alpha. Number two, you'll see I use the same indicators, the same rules, nothing changes. And it will amaze a lot of people, I think, because some people don't, you're only trading day trading. You're only thinking about day trading. But as you start to accumulate and grow your bag in day trading, what you'll want to do is you'll want to pull some of that capital out and have your capital work for you in other aspects of the market. And maybe even the holy grail of what I'd like to get to, which I don't think I will, but is, okay, let's go beyond the markets and let's talk about capital protection. Let's talk about real estate. Let's talk, because that's where some of the wealth is parked as well. So, but that's well beyond. That would be like, hey, my nephew and I knock it out over the next couple of weeks. We get everything into the Rex Dog trading. That is like the vault of all the trading knowledge I believe you need to be able to trade any time frame in any market, which is there already. It's just, here's the difference. You can take all the knowledge that is there and then just change the time frames and you'll do very well. What I haven't done is told you how to actually and specifically said, okay, so for instance, on short-term swing trades, the lowest chart you're going to be probably looking at is either the 60 or the 30. And we do look at one non-time based chart, but then we also start getting into other aspects of looking at the actual point of control, looking at volume, and bringing volume into looking at value channels at a larger level. So there's a little bit different thinking, but it's nothing that's not already in the training. It's just flipping the thinking into a larger time frame, into larger ATRs, larger moves. I think Rex wants to go to the bathroom, or he just wants your love. So I guess what I would, anyways, I know I just went on kind of like a verbal, not tirade there, but just kind of like went over like what we're working on.
Order filled.
Does that anybody have an immediate feedback based on what I've shared? And if you don't, that's fine too. But
oh, it sounds interesting. So it's all about to know, yeah, the system. I'm just making the day trade for now. So it's always welcome to have knowledge more than now, because as well I'm trading some crypto for longer time.
yeah,
And yeah,
and we'll so. Yeah, sorry to break in there. I apologize. I need to let people finish before I just get excited. The current training will kind of more be tagged as day trading, but then we'll get into specific the 4 types of trade timeframes, and then we'll also there is a forex section of the site. So I want to have an equity section, a crypto section, and I'm missing one market. Well, we already have futures, but so
options before, maybe you would add options.
yeah, and then options is the last thing, just because the problem with options is that it can be so distracting to what we do because it's a different way of thinking. It's not, but it is. And the other thing is I don't feel like I'm the best person to teach options. So I might even recommend someone's options course and then say, okay, if you want to trade options, go buy this course. And then here's how to apply these theories within our system. Just because I don't have the energy, or I just don't think that I'm the best person to teach options because I'm not day in trading it. It's not, I do well with it. I just don't, it's the last trading style that I actually trade. There's one options that I think everybody could be trading that is awesome, which is basically we identify 25 tickers, and it's a Bollinger Band and Keltner channel strategy. And when price gets outside of the Bollinger Band and Keltner channel, then you trade covered calls, you trade butterflies, you trade other type of options. That's the simplest one I think I'd start with. And it's really, you're just watching 25 different tickers and then just get alerts on. There's one other aspect of that you need to do beyond just, hey, is it outside the extreme? Then there is aspects of the Rexdog system that makes it more. And this is a system I got from, I'll attribute it to whoever I got it from, but that's one of the systems that I trade.
So everything sounds interesting. So, and I also think that the people that are here in this channel are different states or different, how you say it in English, in a different approach. So my goal is to master now the RDA, so concentrating on one thing and to master it, and then maybe the second maybe a crypto or futures or whatever it is to learn, still to learn. So it's always welcome to learn new things. But if you get distracted, so I talk for me, for when I'm concentrating to three different things, that's not for me. Maybe it's for other, but for me, I really in the beginning to understand or to master the RDA. So,
No, I agree. So that's the other thing that I'm guarding against is that what will make apparent. Sorry, I wasn't sharing my screen. So which is what I do not want to cause confusion. So a big part of this is we're not just going to be releasing new stuff. There's some holes in the current training, or not holes. There's different ways we can approach the current training that I want to start attacking so that we can further build out covering concepts like momentum or bias, or even today, if you were on earlier today, I think, Asenki and us, we were talking about doing pre-market. And I think I mentioned a few things maybe in the pre-market analysis that is, I believe, within the training somewhere, but it's not as concise as the 5-minute, 10-minute explanation of how I explained what we were trading earlier in the day and what was driving the decisions. And a lot of that is just down to, it's simplistic, but if you haven't heard it, some of the actions that I was taking within the system, you'd have full context then, if that's clear.
yeah, I was not in the early stream, but I came in later. But it's clear. So the pre-market, I'm in Europe. I trade a lot of times in the morning when it's a little bit less volatile. But this morning it worked really well. So morning when it was in the Europe Open, so London Open or London session.
Yeah, for sure. I mean, there's a 4 to 3 hour window, and before the Open, that usually does provide some good moves before the cash market here, if you are able to trade it and your time meets up. I used to set my alarm at like 4 in the morning, 4:30 in the morning, so I could catch these moves back when I was fanatical.
Yeah, maybe I notice sometimes it's good when you're in the right direction. Sometimes it goes totally to the opposite, or I'm interpreting the chart wrong. So I'm trying to figure out some pivot points at a certain time before opening. But I think you have established a lot more experience in certain time periods or in certain situations. So I'm not sure if it could be something like a checklist you shared already. I think it was a mind map.
Yep.
And so this mind map, I looked at it, and it was much clearer for me. I saved it in my my bookmarks, but sometimes it's already here, the information, and then like you said, you are organizing the Rexstock website now, and it helps to find it easier or to find it back. So with bookmarks or with some tags, it could be helpful sometimes.
And that's on the list, actually, that pivots, which is the time pivots is what we call it. So that's on the list of doing training section on that. So that's been on the list. You know what ideally what we want to do is I want to have the training more scripted. Allow for going off the cuff here and there, but have it be more focused, have it more be bite-sized content, anywhere from 5 to 10 to 15 minutes. No video really going over 15 minutes. If it does, then maybe break it out into 2 things. And then having accompanying text as well as accompanying images that explain those concepts so that you can go to the site, scan it, and maybe get reminded of a concept. Also, I think there's opportunity for a not a rules or laws, but something along the lines of guidelines of the system, at least from a foundational level.
I think, sorry to interrupt, but I think, I don't know if it's possible, but I've been thinking that perhaps some of the concepts could be put into sort of like a cheat sheet, like, I don't know if it makes sense because every situation is unique. But
No, I think it could. I do believe it could be. So I know it could be. So it's just a matter of
you could have one like laminated
yeah.
piece of paper, A4 format. On one side is the momentum trade checklist, and on the other one is the fake trade. You know.
Yeah, I do believe that there's a, if you look at the scientific approach of just the scientific method, right? You have laws, you have theories, and what else do you have? I think there's 3 things that you have in the scientific approach. I think that we could model that. We don't have to be as scientific just to be cool, but I mean, I think there's a aspect. So like, let me see. I pulled this up. So the scientific approach, you have a hypothesis, theory, and a law. So I was kind of looking at the model of science to say, okay, could we use that model to create what you just said, which is basically a cheat sheet? And I think there is ability where we take the thinking of the system and put it either as a law, a theory, or a hypothesis. And maybe we don't call it that because that's all sciencey and it's all nerdy. But a law basically is something that's you can use to predict behavior, and they're well supported by observations and evidence. A theory is, they aren't likely to change. They're not guesses, but they're not as strong as a law. And then
a theory, like I always, like to me, theory and hypothesis sound almost like the same thing, but the major difference is the theory is backed by the evidence, while hypothesis is really, it's a suggested where it's going to go, what it's going to happen. Like basically,
it's an educated guess.
Yeah, exactly. It's more like an opinion, right? Like
Yeah.
hypothesis is really an opinion, but it's just a more scientific term. But the theory is backed by evidence, and yeah.
But it's not as reliable as a law. A law is something that basically every time the law of gravity can be calculated scientifically, mathematically, and is predictive. And pretty much, I mean, until you get on the minute scales of particles and everything else, then it starts getting weird. But overall, it's very predictive. So
yeah, but in the market, there is never 100%. So it's impossible to say, okay, there is a law. Like I mean, there's very few laws in the market, and they're more around the lines of market is set to open at that time, set to close. But even that could, you could have a market halt, and now market no longer is trading, even though,
yeah. Yeah, but I think that there is opportunity for some level of laws that you just put in place, even though, yeah, there are outsized cases where it's not as reliable on a scientific basis. But for instance, if all of the charts are momentum and bias one direction, the law is you trade momentum and you only fade the extremes. That's the law. I mean, there's no other way to look at that. You just, because you're just 99% of the time, if you're fading that, for instance, would be a law, is what I would consider a law. If that makes sense on how it would be. But you're right, there is kind of like this kind of difficult way to describe it in a way that is as scientific as the scientific method.
Well, the market is really non-deterministic, and I mean, it's not like in math where it's clear, precise, and it's always the case. Like in any language,
I'd say our system's pretty reliable, though, a good majority of the time. But you're right. There is times where,
maybe the law says that, okay, this is a profitable setup across everything, and that's still more of a
what's wrong, buddy?
Theory than law, right? Like, I mean, a law is a theory that you mathematically proven.
Yeah.
Right? Like you actually not just by evidence, not just by statistics, but like you've proven that there is no way anything else could happen.
Yeah, and the proper mathematic or the proper science way to say it is that it's typically well supported by observations or experimental evidence. Well supported is the key phrase there, right?
Right. Here's a comical one. Like, let's say someone's watching you for a long time and you never had a losing day. And the theory is that Rexstock never loses. Right? And then you have a losing day, but that's just one out of, like, that's just the exception to the rule, but it's still not the law.
Yeah.
That you would never ever have a losing day.
Rex.
Theory, the evidence suggests that you never have a losing day until we actually do.
Well, I've had two this year, so that up until 2.5 years or 3 years or whatever it was kind of the law. So
right, but my point is, this is statistically insignificant, yet it's not a law.
Yeah,
it's not a guarantee.
Yeah, so I've wrestled with how do I. So, for instance, I've said many times that, Rex, what's wrong? Hold on. Yeah, so I've wrestled with how do I define this, or how do I go about defining this? That's one thing I've wrestled with. Like, how do I, or is it even worthwhile? But so, for instance, chart 4 levels, I will trade every single day. I would, that's why we're working on releasing a signal service that is based on the Rexstock system. And the signal service to me is trades at 85 to 95% of the trades you would want to take. So the signal service at first is going to be 85 to 95% of the trades that I would want to know across 12 different futures tickers. So for instance, when a strong level, the first test of a strong level on any ticker, I'm going to want to take that trade on chart 4. There's a combination of things that combine on an RDA check on chart 4 that when that hits, I'm going to want to take that trade. So the signal service that we're building is something that I wanted for a long time for myself, but I think other people will find value in it because basically it will be, you're going to want to take those trades. It's just, I would, beyond a doubt, the signals that I get from this first iteration is I'd want to take every single one of those trades. And then we'll start moving on to the less probable trades as a separate channel, for instance. I think we're going to do it within Discord and Telegram. Well, we'll figure it out, but we're in the early phases of testing it right now. But that's an example where I've identified the the best trades that I'd want to take that I miss because I'm not watching 12 different tickers. And to give you an example, so the trade on GC at 1940 is the next high probability trade that I'd like to take. The trade that hit on GC that I did take was 1953 selling would be something that I would want to be alerted on. On CL, CL hasn't moved much yet today, but the second that it breached 87.82 is when I would want to fade the market. And the second that it came back to 87.14, 87.18 is when I'd want to buy the CL market. So these are, right now I have to watch the chart or put alerts or whatever, but we're working towards, we're in the early process of these high probability trades being as an alert service. I don't know if that sounds excited to anybody.
Yep, it does. But
Yeah,
like
for me
any-
as well. Sorry.
like anything else, I mean, I did
Yes.
some very limited tests with like alerting on RDA checks, momentum checks. And in a way, it was useful, but it can also be distracting. How can I word this? For a beginner, this actually might seem like something that's like training wheels, but at the same time, it takes away like the work you have to put in to be able to do the work yourself. Meaning, these tools are great if you know exactly what they're doing and what work they're saving you. But if you use them without doing the work, it could be a problem for some people. I guess that's what I'm trying to say.
No, I agree. And I'll have little patience for people that actually, because it'll be paid service. It's going to be paid service. It's not going to be free. And I'll have little patience. Number one, it's not going to be something that someone can just buy and use without being an alpha. So that's the first thing. But I will have little patience from people that are trying to implement the signals. And it's obvious they don't have an understanding of how to implement the signals. So it'll be very clear. And I'll have very limited patience for people that aren't putting in the time to understand why these signals are so valuable. So I agree with you 100%, which is if someone just, let's say someone just came on board and then they said, hey, yeah, these signals look great. And then they just start trading just those, but then, they're not trading them well because they don't understand the 4-chart setup, how to look for confirmation, how to scale in properly, all the things that is required to trade. If you were trading this without the signal service, you'd have to know, right? So I agree. So I'm 100% with you, but it'll be pretty clear once we get to that level that we won't have much patience for people. That is like, hey, it's not patience. It's more like, hey, if you're going to use this, go figure out how to use it. It's like, it's there. You just need to spend the time instead of being lazy.
Yeah, but like I'm just putting myself in the shoes of like if I was to come on board and you already had those signals, I think that would have prevented me from going deeper into the theory and like I'm not saying I wouldn't, but it could have at least slowed me down. So I guess what I'm trying to say is perhaps gotta be careful with this to not have people just jump. There's a lot of people out there that's all they want, just signals. They don't care about anything else. And for me, the value here is learning how to fish it yourself.
I agree. I mean, that's why we haven't really released it before, and that's why it just won't be. I mean, maybe I will put a cap on it where you have to be, but that's kind of personal responsibility. Then it comes into like, how much do I need to hold someone's hand to say, hey, do this right? But I will tell you, I won't have patience with someone that is very clear that they haven't spent the time or the effort in watching charts or applying the system and thinking about it critically, and then trying to shortcut it. That's one of the reasons why we could, a year ago, we thought about a signal service, but I'm at the point now where I want it. So just because I'm getting sick of watching charts and looking at charts, and if I just executed these 4 to 5 high probability trades, that might even be enough for me. So I want it anyways, and so but I agree with you. I mean, but like I said, I have very little patience for people that. Well, the philosophy I've kind of looked at it too is we've always taken the philosophy of, hey, we're teaching you to fish here, but I think some of the philosophy we might move into is we might feed you a little bit and teach you to fish. But if you're only just sitting down at dinner time and just not going out and fishing, then the less we're really interested in feeding you. That's the approach I'm taking. So I want to provide more of the food, like the fish. So like if, let's say, you just came into camp, well, look, you came into camp, you think like us. Now you'll get fed and you'll get fish, but you also need to put in the effort to learn how to fish. And if you continuously don't go out there and get up at 5 o'clock or 4 o'clock in the morning before the sun comes up and fish with us, then it's obvious what you're just here for. And that's the level of kind of feedback and support you'll get. So that's kind of my philosophy of it moving forward.
Hi, this is the Jedi Skywalker. I just want to, from my personal perspective, when I was becoming an alpha, obviously these signals would be tremendously appreciated. Was actually one of my dreams to have some kind of this kind of a service, even if it's you have to pay for it. Obviously, 10 times, 100 times worth it. But to me, as a beginner, as an alpha, would have been tremendously helpful to have those kind of signals. And at this point, which is like 4 months after I became an alpha, I would have been 100 times far ahead where I am right now if I had those signals. So please definitely finish developing it. Looking forward tremendously to seeing them, and it will be tremendously helpful, and especially in going through the learning curve, so to speak. And I agree, and that's how you kind of find yourself fishing, but much faster pace. For instance, in the beginning, when I was watching you, Red Dog, trading live, I didn't understood the difference between fade trades, momentum, and all that stuff. I was extremely confused watching you fade and looking for the answers, looking at momentum and bias kind of a thing. But with the signals, I think it will be much clearer and faster to learn and go through the learning curve. And as having those signals coming in constantly, it will reassure your kind of a thinking of how you see it, plus kind of an additional confirmation of those signals. So that's how I'm looking at it. That's how I look forward seeing it and drooling already, so to speak. But thank you so much for trying to develop it.
The other thing I would say about the signals, like, of course, I don't know what you have in store, but it you your the signals can only, like, they would only do what you program, and every situation is specific. So those signals would be a very small subset of what the RexDoc system can really do for you, right? So you as a human trader, I think, would always be far more effective, but it's of course far more work and far more draining on you because it takes mental energy to make these decisions. I don't know if I'm like, I guess where I'm going with all of this is that it's a useful tool But for those that are willing to learn and grow, it's almost like a never-ending experience where, like, as long as you develop yourself, there's always going to be more nuances and things that you can add to it.
Order filled.
Yeah, and so I'll comment on both of that. So really, the first version of the tool is I've subscribed to many signal services, and they're all garbage. That they're garbage unless 90% of the time, I'd say 90% of the time, those are trades that you want to take. Now, that doesn't mean every trade works out, but 90% of the time, those are trades that you would want to take. The problem with most of the signal services that I've used is that they just give you so many signals, and it's not high probability trades. It's just signals, and they're not within a context of a greater system that has already built in. So I'll give you an example. The first signal that's going to be released is a strong level check on chart 4 that has certain criteria that would be a trade that I would take no matter what. Meaning I would be taking that trade if I was watching the chart in real time, or if I wasn't watching the chart in real time, that I would want to take that trade. So that's the first version. And if we even get past that, I have no idea. But I'll just say that that's the first version. Is I've identified 4, maybe 5 trades on the 4 chart setup that have a certain criteria that, while can't be automated because it still needs a human touch to manage that trade, they are trades that you would want to be aware of regardless of there are trades that you'd want to be aware of regardless, just because of the probability that there is a reaction there, and one of the reasons for why it's difficult to automate this is because while the reason for executing that trade is a high probability reaction, the trade management and the amount of different criteria of what goes on after you've entered that trade to maximize your profit, or to stay in that trade, or to manage the trade, includes too many counter signals that you can't define into 2 or 3 risk parameters other than being a human. Just because you can't there's not enough. I wish there was, and we're getting close, but there's not enough cohesive. Hey, this happens, and then this aligns, and then this aligns, and then this aligns. Okay, put your risk here, move your stops up. Once this happens, do this. Those trades happen twice a day. The trades that are very clear and very can be mathematically defined into simple aspects of how the system works are 2 or 3 times a day. Maybe. And even then there's some nuance in there. Now, that's from an automation algorithm perspective. From a human perspective, the trades are anywhere from 10 to 12 times a day. So this is within a 24-hour day on the futures market. So for instance, if you look at some of the overnight sessions, there are times when a strong level's checked and you'd want to be in that trade, but you're not going to be watching the chart. But if you were notified and you were around for that trade, you could enter that trade and manage that trade basically in real time, although it's going to take the course of 3 hours for that trade to work out. But you'd still want to execute that trade. Same with, I could pull up another chart here. We could pull up corn, and I could almost find probably on corn, there were 2 trades today that I'd probably want to be notified of. So that's just an example. I mean, that's
I think also from a psychological point of view, it would help people that are hesitant to press the button. Like they've seen a lot of stuff, and it'd be like a confirmation. But again, you'd have to have done the stuff. So you'd have to know yourself that this is probably a good area, and then they get a confirmation from you that this is a good area and this and this. So any hesitancy that people have with real money, real risk, then I would say that would be an advantage. At least get them going with it.
Yeah, I would think so. I mean, you still, like you said, I know, just be honest, in this market a while now, I know what people want, right? People want, push button signal service. I understand it, but
I don't want I don't think anybody here wants that.
Yeah, but I think that everybody here understands. I mean, they've seen. I haven't shilled things. I haven't, I have a moralistic stand on how things should be, right? So any service that would be launched would still be within the moralistic guidelines of what we do here.
Yeah.
And I'm not going to go to the dark side, so to say, just because there's I mean, I would have done it a long time ago if I cared. I don't care about that. I care more about what we do here. But then also there's things that I've hesitated creating just because exactly it puts me into that camp. But now if it can be created, here's my guiding principle. If I can feel good about it and feel that there's tremendous value there and I want it, then I think that the majority of people here will be in the same mindset. But it will always still be the difference that we do here is we always kind of make it a little difficult to figure things out because I want you to work to figure things out on your own. I don't want to just spoon feed you everything because I don't believe if you're spoon fed, you're going to be a successful trader. If you were spoon fed everything, none of you would be successful because you would have no critical thinking on your own. You wouldn't be skeptical. And that's why I'm intentionally, a lot of times I do hesitate from the closest I'll get from, for instance, is the RD scale in. That's the closest I would get. And we'll have a scale in for swing trades and everything else. But that's the closest I get to saying, here's exactly how to do it. And I was even hesitant in doing that because whenever you put something else like that, like the RD scale in and say, here's the scale in, here's the 3 options to scale in, here's the protective stop. People will use that as a crutch and be lazy and not think critically about it and not think critically how to adapt it and trade with it because it's precise what to do. And trading is not precise. I don't know if I just went off too far into the other side, but hopefully that's clear.
No, trading's messy.
Yeah.
But yeah,
so we broke the low, by the way.
Yep. And I'm short. I should have been short up above, but I've got trailing stubs. I'm short on a couple of accounts. It looks like maybe either the close is going to really rally to the upside or the close is going to just give up. I think probably one of the clues you could look at maybe, well, so for instance, big tech gave out the weekly open. We're below the 0 line. I think one of the clues you could start doing if you wanted to get deep into it and say, okay, what's possible here if you are trading like we are into the close? Look at the underlying and kind of see like what we'll do. Like, is there profit taking before the weekend? And is there room like Apple? Apple's at a key inflection point. What we see here, it's about to hit the previous day open. Meta is about to give up the weekly open. Nvidia is about to give the previous day low. Coin is kind of still a long stay. Google is just pulling back from a green day for today. Amazon is pulling back, but still green. Microsoft's still green. So I don't see a big case. Well, I see 2 things. All of these charts, these underlying charts that I just looked at are pretty much at a key level, either a previous low, a previous close of a previous day, or near the weekly open or some kind of reaction zone. So really where we're at right now, if you look at the underlying, is the decision of whether or not it's going to hold at that level and just range out the rest of the day, or it's going to fiercely break those levels and then go down. Is kind of the way I read it.
You don't think there is a case for this to move up from here?
I think the way I looked at the underlying just real quick is that it could use these zones for reaction to go up. But I'm more of the opinion that it's probably based on all our charts now on the NQ, we're momentum short, bias short. So if it moves up, it's gonna hit every reaction zone. And unless it overcomes those by a fierce alpha candle, it's just there's gonna be profit taking. Is the way I would explain it, I guess. There's profit taking of every there'll be profit taking of every level here that hits.
Order filled.
But now would be where you'd want to reverse.
Yeah.
If you see that, if you're short and you want to be long, this is probably where you'd want to do it.
Order filled.
Flat. I wanted to go along here. For some
Stop
reason.
filled. Order filled.
In one of your videos,
Stop
sorry,
filled.
Yep.
oh, I was already talking, but Asensky was still. Did you finish, Asensky? Sorry, I was talking,
Stop
but
filled.
Yeah, go ahead.
okay. No, in one of the videos from Rexstock, I remember that he was talking about wicks and to see a wick like an arrow, so pointing in a direction where probably it would move.
Stop
so
filled.
my question is
Order filled.
on which candle, or when
Order filled.
an error gets invalidated. So when I look, for example, today on C3, there are a lot of wicks going to the upside above the RDA. So
Order filled.
the direction
Order filled.
is going down.
Order rejected.
So is there a way you would say these wicks are not valid, or?
So I would not for today's price action, given the current price action, but going into next week, I would put precedence in the fact that those wicks on chart 3 exceeded the RDA and pointed that the price wants to go forward, wants to go up based on intention. So that's the way I would view it going into the next week. Of course, what happens on Monday is very clear. Like how does Monday open? What
Order
happens,
filled.
or Sunday as well? How does the market open, and then how does the cash market open would play? But from a fundamentals of the system, based on yes, those are. I mean, all of those were just overshoots of the RDA, and then it started just giving up the RDA. But that's showing at least that the market has intention to go to the next level. Now, one thing on that is it never really got to the key level around 403, but that's within a tolerance. So that's how I would look. That's how, if this same pattern was somewhere else on the chart. Well, so for instance, if you look at the 9-7, and I'll share this in the trade room. If you look at 9-7 on chart 3, these aren't, you still would put precedence. So where my cursor is there, you'd still put precedence as far as that showing that the market might want to go down.
Sorry, Rex. Where are you sharing this? You said in the trade room. Where?
Oh yeah, and so I just shared it in general in Discord. So
okay. No, I was no. Okay. Yeah, now I'm here. Okay.
Yep. So if I didn't, I should share the larger chart so that it's clear. But so those rejections to the downside, while you should look at them as
Order filled.
arrows as well as rejection, you need to look at them in both ways, but then figure out which one's more important. Because of where they're at in the chart in relation to the indicators that we use within our system, they have less of an intention meaning because there's no relevant indicator, there's no relevant important reaction zone that they're around to signal that they should be looked at more as intention than rejection. But because of the ones that happen today are at the RDA and exceeding the RDA, they play more of a role as intention because of where they're functionally at on the chart and how we read our system.
Okay, but we stay in the time frame of 1 hour, or do we switch maybe to bigger time frames? So my
Guessing.
opinion about the daily, because if you switch to the daily, we have a long wick going down, and now if we are the daily is not finished yet, but we have a long wick to the daily high, yeah,
Order filled.
and it's pointing down. On the daily, we are now below the M24.
Yeah, I mean, I get what you're saying, but okay, so we could get lost in paralysis of analysis, okay, and go to the 4-day, we go to the daily, we go to the 4-hour. At some point in time, you've got to decide what your control is. You've got to decide what is your time frame of trading, what's your control, and we could go down all timelines and try to say, do they correlate? Do they this, right? So, and
Yeah.
one of the things you'll appreciate about the system is that there's multiple ways usually to get there. What should be concerning is if, like, you do look at a higher time frame and it becomes more confusing, or you look at a different time frame and things become more cluttered or more unclear, then maybe you do have to look in. But at the end of the day, you have to have one controlling chart that's controlling your thesis of the trade.
Filled.
And then how you're, the way to look at it is you have a longer term time frame that you would believe the market's heading towards, and then you have your immediate time frame that is maybe what you're trading on, but then also you're looking at the longer term momentum. So this, looking at this 60-minute chart through intention is looking at it through a longer term time frame, is looking at, and that's where maybe you would correlate to the daily, but even then,
Order
it said
filled.
you have to decide which one of these signals do you put more precedence in based on the story of the chart at the given time and the trade you want to take.
Okay.
So, for instance, let's say that the market does hold here where it's holding, and then it closes around 3, let's say it closes just short of the RDA today in the next 50 minutes. You know, without having the open or the, but you could make the case then that there's a stair-step pattern developing on chart 3, and that then you should put precedence into the actual intention of those 60-minute candles. And then you can go to the daily and then look at the same thing and say, well, you know, what really happened there? What was, you know, what, is there any other clues other than there's a strong level on the NQ, at least the continuous contract, right around on the daily, right around 538, that was a strong level or weak level. It's really a weak level if you're watching. And on the 4-day, so if you look at the 4-day, the NQ, 538 is a strong level on the 4-day. So this would have been the first test of that 4-day level. Like I said, there's multiple ways you could get to where we're at. On the 4-day, though, that you'd like to see a little bit more breach of that level to show that it actually had more intention of breaking that level than it did. So on the 4-day, you can make the argument that there's higher probability that the next week is going to actually pull back and maybe get further into the previous candle, maybe even test the previous candle's open right around 273. You know, so I'm not trying to confuse you or trying to talk double-sided.
It's for me. Okay, I'm day trading, so I'm trying to see to trade from strong level to strong level. So sometimes I maybe I get confused if I want to go long or short, but at least I try to wait and to develop the patience to wait for the reaction on the strong level and to have a confirmation if it's going to, in which direction it's going. So yeah, C3 is regular my control chart, but today it was up and down, like a lot of times, but I'm good in profit. Yesterday I had some loss, and today I got the double of the loss from yesterday. I got back, so it's okay. I need to decide what is my control chart and on what level I want to go in and where I want to go out, and not to wait too long that trade is turning around. So I place a stop loss maybe too far away. So because I was convinced that it's still going up, but then it switched down, and
Yeah, and that's, I mean, I get it. I mean, that's, but I think the one main thing is you definitely need to decide on what you're going to make your control. And then, you know, because then you don't get confused. And then you know, you'll find that you like some charts as your control over other charts. And like you said, you use the 60 a lot. So part of it is understanding how price moves around the various indicators and the levels and everything else around that particular control chart.
What I found interesting today, Asensky said he was looking on the NQ, and I'm trading the MNQ on my demo account, but there was the RDA is on another place on the NQ than on the MNQ, and for me it was we are in this range, yeah, and on NNQ the RDA was below, and on the MNQ it was above range. So
yeah, I mean, and that's the thing. I think that's a lot of people would like just things to kind of correlate all the time, you know, and at some point in time you've got to like realize that not everything's going to correlate all the time, and you have to take 2 to 3 correlations instead of trying to get 6, you know.
yeah.
So I was just spent a little bit of time looking around the market at different CME things and different things, and you know there's 2 or 3 trades that I would have liked to take that, you know, because I don't have the charts up, like on silver, for instance. The silver trade where it lost the RDA at 611, or actually not 611. I'm on the wrong contract there. But that would have been a key trade that, because I don't have up anymore, I missed, right? Good short, you know, made, I don't know how many ticks. I have to just measure that. You know, what I don't remember. There's Forex futures too. I have to remember is that part of the CME? Some of them are part of the CME, like JPU is part of the CME, I believe. Isn't it? Anyway, yeah. For the J. Oh, you mean Japanese yen. Okay. Yeah. Problem is those charts are really thin generally. I might just be calling it a day here just because I think it's just going to range out the rest. I mean, it might move, but I don't feel like trading deep into the open or deep into the close. And I'm just dinging my P&L here by staying in this trade and not and waiting for, I mean, really should be trading the momentum of the trade there, which is short. I am, what's the word I'm looking for?
Order filled. Order filled.
Still short in the gold trade. I'll go flat here in a little bit. I was waiting for the 1940 target to really hit.
Order filled. Order filled. Order filled.
Well, it was clear when this alpha candle popped up early in the afternoon, right around 14:10 market time, 13:10. That alpha candle really set the tone for a momentum short the rest of the day. We'll see if that plays out, but that's what I would might have a surprise move up, but I'm at the point where I'm ready for a break and ready to call it a day. Any other questions before we call it a day? Anything else anybody wants to mention, talk about, ask, cover? Any? Want to share your horoscope? Anything like that?
Well, I've no questions, but just want to say it's been good conversation all day long today. Very informative. So
Sweet, appreciate it.
yeah.
Got anything else you want to add, Nephew Elite? Okay, that was more than I expected you to have.
Well, for being here, and yeah, always a pleasure to listen and exchange some opinions.
Oh, you too, and I appreciate everybody here too. It's been good getting feedback and got some notes here, things we want to work on and add to just from today as well.
Great session. Thank you so much for making the time. It's very, very helpful. Very eye-opening.
That's good to hear. No, like I said, there's a lot of, I'd say, people that are showing up. There's progress. Everybody's making progress. So I see it. I can see it from afar, so just keep it up, keep focused. And I'll just share, like I did before, it's not going to be a day where you're going to get up and suddenly you're going to have feel like you're on a unicorn and you're going to have this invincible armor and you're going to feel like, you've just got it all figured out. But what's going to happen is slowly it's just going to become more natural. So you should already be feeling, most of you should already be feeling that it's starting to become more natural, so that's really how it works. It just slowly becomes natural until you make one dumb mistake and then you realize you don't know anything. And then it's just, okay, I didn't realize I still have that psychological issue. And then you fix that one dumb mistake. But the thing is, your dumb mistakes start becoming less and less. They start to occur less and less, as well as your mistakes start to hurt you less and less. So where you know that you're not making progress is if that you're still making mistakes where they're hurting you a lot and you're making mistakes rather often. So you should use that as feedback, as whatever those mistakes are. That's the number one things you need to squash. But then how you know you're making progress, because it's hard because it's just you're just by yourself. I mean, yeah, you're here in the group, and if you do share your journal, of course, I give feedback and do share anything I see that might be a challenge or things to work on. But really, it comes down to you'll start to get more confidence in taking trades, managing trades, and more importantly, predicting. You'll start to almost become one with the predictions and realize that it's starting to click. So that's how it happens. It's not just one day you wake up and suddenly you're a trading god. It's a slow iterative process. You have to turn into a butterfly or whatever that phrase is.
Order filled.
I'm gonna get out. I'm burning through P&L on this stuff.
Order filled.
I'll probably get out of the GC trade too. I could probably hold it over the weekend maybe. Let's see where we're at. Entry wise, daily wise. Let's look at the daily. GC daily, continuous contract. All right. 54. I'll probably go flat. The reason why is because if the market opens and it might open, or no, it's going to close around this range, it looks like. If it opens, I could just see Sunday just slowly just stepping up to right around 50% of this candle, right around 1953, which is my entry. So I could also see it gapping down and coming down and testing the RDA, but why not just take the profit and then trade either the reaction on Monday instead of waking up on Sunday or seeing the market open on Sunday and then it gaps up a little bit up to like 1945 and then it just slowly climbs, you know. So that's kind of my assessment why I'm going to go flat, not hold over the weekend. Now, this comes down to trade management too. I could say, look, let me just go flat on two lots, you know, just whatever you're in, you could just scale up accordingly. I could say, look, just so I don't regret it, I could, as long as I'm going to be around on Sunday to make sure I'm managing the position, or put in a stop that's until canceled, not just good for the day. So not GTC, but good till canceled. So I could put a GTC trade in or a GTC stop in. So I could go, well, I think I'll do that. So I sold 2. And then now what I could do is I could put in 2 GTC trades stops, and GTC means good till canceled. So there's on Trade08, they provide a button right there where you could do day or GTC, and the GTC is good till canceled. So that stop that I have on gold, sorry, I'm not showing the gold. These stops should be still there on Sunday when the market opens back up because I entered them on GTC, which is good till canceled. The other option that it defaults to is day, meaning that when you put a stop in the market or you put an order in the market, when the market closes for settlement, I suggest you trade on day, just because if you keep your charts on GTC, you might have an entry somewhere that you don't want. You should just get into the habit too of going flat every day if you're a day trader anyways. But now pretty much I still have 2 lots up far enough where if it does gap up and maybe gap up and open at 1947, maybe I could still be part of the trade if it continues to sell off for an RDA check on chart, on the daily chart. So maybe it will go down and maybe come down to 1928 or maybe even 1934. So maybe I can eke a little bit more out of this trade. But the key is you don't want to have to get up on Sunday. You have to check with your broker too. Don't just do these things and assume it's going to work. But you don't want to have to get up on Sunday or log into Sunday and make sure you have your orders in. You still should, but once you start using it, you realize it. But so now I put in these stops as good to cancel, not as day stops. So past settlement and over the weekend, these orders should still be in. Now, typically you could log in over the weekend on Saturday and those orders should still be there. That's one way to check. You won't be able to modify them, but well, you might be able to modify them to defend the broker, but you won't be able to modify them, but they should still be there. They should still show up if they're good till cancel. Anyways, once again, I said I was going to go, but I kept going off on trying to teach more knowledge. Anything else you want to add, Nephew Elite, before we go?
Appreciate everyone stopping by, hanging out.
I don't know if you're muted or not.
Oh, I'm muted still.
Or are you muted?
I appreciate everyone tuning in the stream, everyone hanging out, talking. That's been conversations with everybody here, so I had a lot of fun. Good Friday trading.
Yeah, as usual, another good week of trading. Look forward to seeing everybody. We'll be around probably over the weekend, popping in here and there too. I do need to do a Bitcoin update, so I'm waiting to kind of do a Bitcoin update, kind of look at the crypto market. I want to give the crypto market some love next week, so we're going to dive into the crypto market a little bit next week. Also see if there's some opportunities for some swing or for some flyers on the crypto market, given we're in September, and September sometimes is a pivot point for some of the crypto market. So maybe there's an opportunity to see if there's things that are popping up on the radar. We should start looking at dollar cost averaging in or something like that. All right, everybody, have a great weekend. Thank you, everybody that showed up. I appreciate each one of you. If you have questions, share them in general, share them in the den, and look forward to seeing everybody next week.
Yeah, thank you as well. Have a nice weekend all. Bye-bye.
See, I don't think I've gone out on this. Do I still have the audio here? No, I don't. I can't go out on Black Dynamite. Shoot. Gonna have to get that set up down here. All right. See you, everybody.
Okay, see you.
Peace.